Seven, 5, 4, 3.
You're watching TBPN!
It is Thursday, August 28th, 2025. We are live from the TBPN Ultra Dome, the Temple of Technology, the Fortress of Finance,
the capital of capital.
NVIDIA earnings were yesterday. They hit consensus estimates, both on earnings per share and revenue, but the stock sold off. In after-hours trading, wasn't bullish enough. The whispers were that maybe something even crazier was going to happen. But this business has been on a tear. The quarterly revenue chart is absolutely insane. One of the craziest charts I've ever seen in business. And the pricing power is unrivaled. The gross profit margin per fiscal year is insane. They're up in 75%.
Not bad.
Fantastic business overall. But of course, the question is, where does NVIDIA go from here? Where's the business? We can read from the Wall Street Journal to kind of give you the headlines.
It's rough when a business announces a $60 billion buyback and everybody's screaming bearish. That's bearish.
Yeah.
It's like we're giving profits back to shareholders.
Yeah, we have an extra $60 billion sitting around because we're doing so well. And everyone's like, boo. Boo. It's crazy. Grow faster. NVIDIA set fresh sales records on Wednesday as the world's most valuable publicly traded company continued to capitalize on strong demand for AI computing power. Sales hit $46.7 billion, up 56% from the year earlier, in line with revenue estimates from analysts. Revenue from the important data center segment, which includes sales of the company's most powerful chips used to train and refine artificial intelligence models, rose 56% to $41.1 billion, and this was slightly lower than what analysts expected at $41.3. And so that's probably what was driving the market moving in the after hours. Because that should be that should be the strongest place of growth is the data center business. Whereas if gaming was selling off, or they have some automotive businesses, they have a variety of other products. The vast majority, I think 90% of the revenue almost is from data center, and obviously that's been the huge driver and the huge narrative. So
we're actually going to pull up a quick graphic now of Jensen for you guys. In case you haven't seen it.
Oh, yes.
Yesterday.
Looks great.
Going head-to-head with himself.
Yes.
He's really... He again,
market cap's $4.4 trillion, is that right?
Hopefully.
There we go.
Yep.
Quarterly net income was $26.4 billion. 59% higher than a year ago. The company predicted revenue of $54 billion for the third quarter, slightly higher than consensus. NVIDIA shares fell about 2% because of a narrow miss of revenue forecast for its data center business. Surging demand from the fast-growing AI industry is largely responsible for NVIDIA's strong results, as software companies like OpenAI, Microsoft, Amazon.com, Alphabet, and Meta platforms continue to train ever more powerful AI models. And so the there were a few numbers that stuck out from the earnings call. The big one that everyone was talking about was this prediction, this broad prediction of not specifically NVIDIA's revenues, but of overall AI infrastructure spend, quote, through the end of the decade, which is always kind of hard because does that mean you include 2030 or do you stop at 2029? When does the decade really end? But most people are calling it 5 years. They're calling it the end of 2030, and the prediction from the NVIDIA team was that we would see $3 to $4 trillion spent on AI infrastructure by the end of the decade. And so I think that's supposed to be an aggregate number. He's not saying that in 2029 we will be spending $4 trillion on AI infrastructure per year. It's more that just over the next 5 years we will see a total of $3 to $4 trillion go out. And my initial take was this sounds high, obviously, but how does it comp to situational awareness? Because Leopold Aschenbrenner, seriously, Leopold Aschenbrenner did a great job forecasting out the growth of AI CapEx, AI infrastructure spend. And so I pulled the numbers, and $3 to $4 trillion is actually way lower than what situational awareness was estimating, which pegged 2030 at something like $8 trillion just in that year, and maybe something like $15 trillion in total investment through the end of the decade. I think that includes some power spend as well. So the definitions, it might not be purely apples to apples here, but it's funny to frame Jensen as like bearish relative to Leopold, who's like super AGI pilled.
Yeah.
And maybe Jensen's like, yeah, I'm happy to.
The account
to grow
Paolo Macro on X said, "Am I the only one thinking NVIDIA is completely jumping the shark here with these kind of projections? I know AI people will swallow whatever, but seriously, only Elon could get away with this sort of talk, which is NVIDIA expects $600 billion in capex for data centers in 2025, and $3 to $4 trillion in data center capex before 2030."
Before 2030, Tyler, what you got?
I was just gonna say, like, people have always kind of said Jensen is like not AGI pilled, half jokingly, just because like, if you're super AGI pilled, obviously you wouldn't be selling the GPUs. You would just hold on to them.
That's a funny.
They're like the most important thing. So
maybe
Jensen is.
I don't know.
Yeah,
I was talking to Jordy about this. Yeah,
the other number that stood out is that NVIDIA's revenue from Singapore keeps breaking all-time highs, reaching $10.1 billion in sales this last quarter. It ranks second after the U.S. and just behind Taiwan. Year-to-date revenue from Singapore is approaching $20 billion.
Yep.
A lot of people had thoughts on this, and kind of trying to figure out
the like loose like accusation from like mostly Anons is like maybe this is someone who's smuggling into China, but NVIDIA, the team made it clear on the call, they used a very specific phrase to say that the company that was buying in Singapore had been cleared by the United States government. And so, who knows? Maybe there's something that the government isn't aware of. Maybe the government needs to revisit that. But like, it seemed like they were very clear that the deal was above board.
But the reason that it stands out is if they've done $20 billion year to date to Singapore. If they get to 40, that will be 7% of Singapore's GDP going to NVIDIA. Which is wild. The other thing that was interesting, there was an exchange around between NVIDIA's CFO and an analyst, and Kress, CFO, said, "We have, in reference to the government or conversations with the government, we have been communicating." She said, "If nothing shows up, I've got licenses. I don't have to do this 15% until I see something that is a true regulatory document."
So maybe the 15% deal was announced. It's more of like a directional thing, and maybe it's not papered yet. And I mean, as we saw,
and the question is like,
that it could just be like another chip on the board that's going to be moved around and immediately traded away. There's a lot of these things that get like pitched, and before they even turn into anything real that affects the business in reality, they get traded for something else.
Optics matter
for sure,
potentially more than the incremental revenue.
A ton.
Is the White House going to be chasing after a few $1 billion? You're picking it off pennies.
But you know what else matters? Ramp. Time is money. Save both. Easy to use corporate cards, bill payments, accounting, and a whole lot more all in one place. Tyler, on the concept of holding onto the GPUs, I was talking to Jordy about this earlier today. It seems like there's this question of like, if NVIDIA is paying $60 billion in buybacks, or they're spending all this money, like, shouldn't they put that? We're in this boom. Shouldn't they invest that money in growth? Shouldn't they do something else? And Jordy was mentioning like maybe they should take more seriously like building an actual cloud service, building their own data center, holding on to the GPUs, as you said. And my counter argument to that was basically that NVIDIA has pretty solid revenue concentration across like the duopoly of, I believe it's Microsoft and Amazon, are like the two biggest power law buyers. I'm pretty sure it's somewhere in here. But anyway, like the hyperscalers are incredibly important. So people go through, it's Meta and Microsoft actually is the one that people are guessing it is, but in any way, the hyperscalers have this oligopoly going in cloud, and there's this game theory where if NVIDIA said, "Hey, we're going to compete with AWS, we're going to compete with Google Cloud Platform or Azure," then those hyperscalers would have an immense incentive to go even deeper into their own silicon and cut out NVIDIA's margin, and so there's this world where, okay, yeah, maybe in this hyper long term it might work out, but there would be immense pressure in the short term, as opposed to right now, if you're NVIDIA and you have all the hyperscalers bidding for chips and they're all in super high demand, and so you're able to reap really high gross margins off of that, make a ton of money. You'd basically be giving that up, I think, if you broke up the oligopoly that buys from you. Like, it's really, really great if you're selling something and two people walk in and they both want it because they have to pay the max price. And we've heard those stories about Elon and Larry Ellison getting dinner with Jensen Huang and being like, "We need chips," and of course Jensen saying like, "Well, Satya and Andy Jassy want chips too, and Mark Zuckerberg wants chips. Like, take a number, right?"
Yep.
Anyway.
Yeah, and they're in the beautiful position right now, which is however much they make of a certain chip is exactly how much they'll sell.
Yep. Anyway, the next earning call, I hope it's on Restream, one live stream, 30 plus destinations, multi-stream, and reach your audience wherever they are. We are, of course, on Restream. Should we go over to the Ben Thompson analysis?
We should.
Doug O'Loughlin from Semi Analysis joins in about 15 minutes. Ben Thompson writes, he quotes from the Wall Street Journal, of course, and says, "It's always dangerous to invoke the mythical law of large numbers, but the most important place to start with NVIDIA's earnings is to check the supply and demand balance." Here's the answer from CEO Jensen Huang on the earnings call. Right now, the buzz is, I'm sure you all know the buzz out there. The buzz is everything is sold out. H100 sold out. H200 sold out. Large CSPs are coming out, renting capacity from other CSPs. And so the AI native startups are really scrambling to get capacity so that they can train their reasoning models.
Meta is buying from NVIDIA, but also renting
from Google,
from
right?
Google.
Yeah,
right.
It's wild.
There was a $10 billion deal announced there last week.
Ben says he made this point a year and a half ago, and it still holds as long as demand. Yeah, the man lives in the future. He lives a day ahead, or he did when he was in Taiwan. Now he's in America. As long as demand for NVIDIA GPUs exceeds supply, then NVIDIA sales are governed by the number of GPUs they can make. That supply is certainly increasing, which is why NVIDIA's sales continue to climb. But assuming that supply increases are linear, then by definition, NVIDIA's growth rate is going to slow as it laps ever larger revenue numbers that themselves grow exponentially. Yes, this was another reality check on, are we feeling the acceleration or are we decelerating? And although the numbers from NVIDIA's revenue growth are insane, like staggering. It's like one of the most beautiful charts I've ever seen in business. It is technically decelerating, just like technically. If we were to just like do the math, it is not accelerating anymore. It's not bad. It's just like it is a reality check on things.
Yep.
So the big complicating factor is China, and I didn't understand this as much as I kind of disagree with Ben maybe a little bit on this, because China does seem like a complicated factor, but it seemed like the business in America was doing great, and really China was like a call option. It was a nice to have if it opens up and AI isn't seen as a weapon, and NVIDIA can seriously grow the China business. It's huge upside, but it doesn't necessarily mean that they're in trouble right now if they can't do anything in China. So he quotes from CFO Colette Kress.
I don't know. I mean, I think again, looking at Apple's situation in China. Like, it is definitely bearish.
Completely different, though. NVIDIA doesn't actually manufacture in China.
Whereas I'm not talking about manufacturing. I'm talking about purely demand, right? Apple's closing retail stores in China.
Apple sold a lot more in China than NVIDIA ever did. And so NVIDIA, like the whole, when Jensen was selling NVIDIA chips to China and the first rumblings of like, hey, maybe he shouldn't do that for geopolitical reasons, like popped up. One of the things people would say is that, look, like, yes, it's it's kind of anti-free markets to not let him sell in China, but also there's plenty of demand in America. Like he doesn't have to sell in China because there's enough demand.
But when Jensen talks about $3 to $4 trillion in capex before 2030, he's certainly including China in that.
Yeah, I think he pegged it at like a $50 billion backlog of demand for NVIDIA chips in China if there were no geopolitical considerations. I am very interested to see where this evolves because the like AI is a weapon narrative is definitely cooling off. And so we could definitely see more opening up. But Colette Kress addressed the H20s. Let me first answer your question regarding what it will take for the H20s to be shipped. There is interest in our H20s. There is an initial set of license that we received. And then additionally, we do have supply and we are ready. And that's why we communicated that somewhere in the range of 2 to 5 billion this quarter, we could potentially ship. We are still waiting on several geopolitical issues going back and forth between the governments and the companies trying to determine the purchases and what they want to do. So it's still open at this time, and we're not exactly sure what the amount it will be this quarter. However, if more interest arrives, more licenses arrive, again, we can also still build additional H20s and ship more as well. NVIDIA cleared, this is Ben Thompson again, NVIDIA cleared one hurdle when the Trump administration, after pausing H20 sales, allowed them to resume. The Chinese government, however, told Chinese companies not to buy the H20s, according to the Financial Times, which we covered on the show. Ben Thompson says he's always wary of falling into the trap of blaming the U.S. for Chinese decisions. This is overly solipsistic view of the world. Is the root of a lot of bad analysis, beyond being insulting to the intelligence and volition of the U.S.'s chief geopolitical rival. At the same time, it would be nice to see the counterfactual of Lutnick keeping his mouth shut, or better yet, the Trump administration not causing a ruckus about the H20s in the first place. The problem, of course, is that Lutnick is right. Chinese companies using NVIDIA chips preserves U.S. dominance of the dominant AI software stack. On the flip side, Chinese companies not using NVIDIA both diminishes U.S. control and for NVIDIA specifically, threatens not just their China sales, but in the long run, their sales everywhere, not just from Chinese competitors, but from competition generally. Should a Chinese Chinese pioneered open source CUDA alternative gain scale, and by extension, the fact that NVIDIA isn't
remember, they're already crushing it on the model side.
Yes. And so the next thing might be, maybe it's not DeepSeek V5 that's like a huge jump in capabilities, but the DeepSeek team or the High Flyer team figures out how to have DeepSeek run on any hardware with an open source stack that's kind of a drop-in replacement for CUDA.
Well, and we were talking earlier before the show about if you're extremely AGI pilled,
yes,
at some point in the future, you can just ask the AI, hey, figure out how to run on hardware other than NVIDIA.
Yes, rewrite this so that it doesn't run on CUDA. Tyler, you like that take? Or are you laughing?
Yeah, that's a good take, I guess. I mean, it's like
if you're NVIDIA, you want AI to be like bullish but not too bullish, like good but not too good. Because if it's bad, it's bad for NVIDIA. If it's good for NVIDIA. But if AI is amazing, you can just in one line like, hey, rewrite ChatGPT or re-implement GPT-5 on TPU or on.
I think it'd just be more efficient to just ask it to like just take over NVIDIA, the company, and then pull it into
I guess at that point we're in like such bizarre territory. But I mean, truly, like replatforming should be something that AI would be uniquely good at. I would imagine.
Yeah, I mean, you already see like a lot of code. Like one of the early like coding use cases was just like translating like JavaScript to TypeScript.
It's a lot
of
what
something like very simple like
exactly.
that.
I mean, AI has been good at just translating English to French for a long time. And
I mean that was the original transformer.
And also, I mean, when you look at the success of like what is cognition really, really great at? What does Microsoft highlight cognition for? It's not necessarily like one-off projects. It's more like replatforming.
Yeah, like tech debt.
Yeah, tech debt. Oh, you have some enterprise system and it's on C# and you want to put it on Python. Like, let's rewrite it. And that's a huge pain to go rewrite all that business logic. But you can just have, Devin or an agent go and like hack away at it for a while. So you could imagine that potentially would happen in the future. But if you've been following George Hotz's problems with NVIDIA and AMD, he's been really trying to like unseat NVIDIA as the high margin business in the space by getting AMD to solve some software bugs. And I think at a certain level, if there are intractable bugs that even George Hotz can't solve, well then, like the frontier AI model might not be able to solve them too. So I don't think this is going to be an overnight story that we're going to see CUDA unseated. Anyway, Ben Thompson continues, moats in China. One interesting way to think about NVIDIA in China and why Wang is so desperate to sell into the country is the nature of their moat. He says, let's talk about ASIC. This is Wang. Let's talk about ASIC first. A lot of projects are started. Many startup companies are created. Very few products go into production. And the reason for that is that it's really hard. Accelerated computing is unlike general purpose computing. You don't write software and just compile it into a processor. Accelerated computing is a full stack co-design problem. The AI factories in the last several years have become so much more complex because the scale of the problems have grown so significantly. So Ben Thompson says the answer captures two parts of the moat. First is CUDA, NVIDIA's software stack for controlling NVIDIA GPUs, which is the default option. The second is that CUDA is everywhere, which means you can go to any cloud provider, hire developers familiar with CUDA, etc. And then Jensen says that in addition to all that, it's just extremely complex systems problem. It's just a extremely complex systems problem. People talk about the chip itself. There's one ASIC, the GPU, that many people talk about. But in order to build Blackwell, the platform, and the Rubin, the platform, we had to build CPUs that connect fast memory, extreme energy efficient memory for large KB caching, necessary for agentic AI, to the GPU, and a super NIC to scale up switch, which we call NVLink. This is the third part, which is networking. I keep referring to NVIDIA's GPUs, but in reality, GPUs work at the system level, particularly for training, and NVIDIA's ability to link GPUs together into a single coherent system is unmatched. This is a big revenue driver too. This quarter, networking revenue was $7.3 billion, which is more than NVIDIA paid for Mellanox, which is the foundation of their networking offering. Pretty sweet that they paid billions, but then now just in this quarter they made more revenue from that acquisition. It's truly one of the greatest acquisitions of all time, says Ben Thompson.
Wow.
Yeah, insane. I don't know if you can go subscribe to Stratechery to read the rest of the article. My other takeaway was on the debate about should NVIDIA pay a dividend or do stock buybacks. And so I looked at the data of, is this out of character? Should you read into that? Because it's a huge number, $60 billion going out of the balance sheet onto into share buybacks. And it's also like the stock's never been, it's the biggest company in the world. The stock's never been higher. Like, we're kind of like buying the top almost.
Yeah. Top blasting yourself potentially.
It feels odd, but I was wondering, like, okay, we need to reality check this. Like, is this actually something new? Is this an idea that they're like out of ideas or something? And that's the Thielian critique of Google doing dividends or share buybacks.
Yeah, they don't have any ideas.
They don't have any ideas. And so we walked through some of the ideas, and there weren't any that really stuck out. If they build their own hyperscaler, well, then they're competing with their best customers. And
you mean a cloud service provider?
Exactly.
Like really go hard in that.
Yes. If they say, "Hey, Amazon, like you don't need to put any more orders in. We're gonna take the GPUs for us." It's like, okay, well then they lost all that margin, all that business. That could be really disruptive.
And that business will take a long time to scale to the point where.
Yeah. And then NVIDIA is investing in startups, and they have a whole business just around GPUs that go into cars. They have an
NVIDIA
automotive
should
business.
Just buy Y Combinator.
Craziest thing.
Just start coming up. I mean, we should sit down and
the dumbest things that they could do.
Gulfstream.
Yeah.
Y Combinator.
Okay, but so what I had, what I pulled in terms of numbers was as in terms of the market cap of NVIDIA at the start of the year, what percentage of that market cap was paid out either in stock buybacks or dividends? And so this year, 60 billion, it's a lot, but the market cap's super high. And so in fact, the total amount of the total net payout as a percentage of the start of the year market cap is 2.82%. So you can think about it as like you're getting 2.8% like yield on the investment, although obviously like the share price movement is much more important. Last year it was 2.7%. The year before it was 1.42%. And in 2022 it was 0.12%. So much lower. So it is growing. But it was so much higher in 2016. 2016 was 7%. Yeah,
the bears came out of hibernation in a big way. NVIDIA is still up 4.6% in the past 5 days.
Yeah, of course.
It's like Jensen has the hardest job in the world.
Truly. I mean, it's such like a price to perfection, like the perfect avatar for the AI boom. Not just indexed AI, but actually like throwing off cash, amazing margins, just really great all around. And it's hard to imagine them like. It's not like they're like getting over their skis because like there can be.
The thing you have to give him credit on is the among a bunch of things, but relentless focus even during this period of euphoria. I mean, there'd be a lot of companies that would be like, we need a mobile phone. Let's make the NVIDIA phone. We need a cloud. We were joking the other week about how a lot of the Mag 7 have a social network. Right? He's not. He's staying focused.
He hasn't even like joked about buying TikTok, and we have. It's one of those things where we saw a pullback in NVIDIA after the crypto boom, when there were a bunch of other things going on with the market and interest rates, but NVIDIA drew down immensely, and part of the story was that GPUs were being used to run Ethereum nodes and validate. And when Ethereum went proof of stake instead of proof of work, it became a lot less compute intensive. And so there was this kind of overhang. There was also an overhang from COVID and there was chip shortages and people buying gaming PCs and stuff. And so NVIDIA drew down a ton. Ben Thompson wrote NVIDIA in the Valley and basically like bottom ticked it perfectly. And fortunately, NVIDIA is set up. I mean, it seems like it is set up to withstand some sort of like correction or drawback or stagnation in AI progress. Like the business would contract, of course, but there's nothing. They're not over their skis where they've like made this massive commitment and they'd be in a ton of trouble, at least from my perspective. Anyway, let me tell you about Figma.com. Think bigger, build faster. Figma helps design and development teams build great products together. We have our first guest, Doug O'Loughlin from SemiAnalysis, hopping on the stream in just a few minutes. In the meantime, I do want to go through this post that Ben Thompson highlights from Ethan Ding about the changing economics of AI. It's a longer post, so we'll have to do it a little bit later. But he quotes here, imagine you start a company knowing that consumers won't pay more than $20 per month. Fine, you think classic VC playbook, charge at cost, sacrifice margins for growth. You've done the math on CAC, LTV, all that. But here's where it gets interesting. You've seen the A16Z chart showing LLM costs dropping 10x every year. So you think I'll break even at $20 a month. And when models get 10x cheaper next year, boom, 90% margins. The losses are temporary. The profits are inevitable. But demand exists for the best language model, period. And the best model always costs about the same because that's what the edge of inference costs today. When you're spending time with AI, whether coding, writing, or thinking, you always max out on quality. Nobody opens Claude and thinks, you know what, let me use the bad version to save my boss some money. We're cognitively greedy creatures. We want the best brain we can get, especially if we're balancing the other side with our time. While it's true each generation of frontier model didn't get more expensive per token, something else happened, something worse. The number of tokens they consumed went absolutely nuclear. ChatGPT used to reply to a one-sentence question with a one-sentence reply. Now deep research will spend 3 minutes planning and 20 minutes reading and another 5 minutes rewriting a report for you, while O3 will just run for 20 minutes to answer. Hello there. The explosion of RL and test time compute has resulted in something nobody saw coming. The length of task that AI can complete is doubling every 6 months. What used to return 1,000 tokens is now returning 100,000 tokens. So interesting dynamic there. We will continue with that, but we need to introduce our first guest of the stream, Doug O'Loughlin from SemiAnalysis. Doug, how you doing?
Good. This time my mic should work. So
there we go.
Sound great.
Mic'd up.
Thank you.
Thanks.
Dude, I didn't want to repeat the last time.
I like that you're holding it too, like some type of rapper.
It's much more personal.
Can we call you? I'm going to call you Young Semi.
I am getting a little ASMR vibe. It's perfect though. I love it.
Hello, welcome to Young Semi's rap. Anyways, what's up, guys? I have no idea what we're talking about.
We're talking about NVIDIA. We're talking about NVIDIA earnings. Give us.
Should we be talking about something else?
Yeah. What else is?
No, I think that's the right thing to talk about. But I guess my brain is really broken. I'm like, bro, this is a snoozer compared to the blowout quarters of past.
Yes, that's fair. What did you take? What do you think about the fact that Jensen is, on a relative basis, extremely bearish compared to Leopold Aschenbrenner at situational awareness? Leopold expects 15 trillion in CapEx or AI spend by 2030. Jensen, a mere 3 to 4 trillion.
I don't know what to tell you, man. I think there might be some people might be talking their book, right? Like I guess I do know Leopold. I definitely know his worldview is Manhattan Project for AI.
Yeah.
So I think maybe Jensen hasn't come around to the Manhattan Project for AI, but I think just a mere 2 or 3 trillion is quite a bit of capex. It's some would say it's not an insignificant amount of money, but they tried to bait him on the call too about token revenue. About it 10xing next year. Yep. I thought that was kind of interesting. I don't know. It was a fine result.
Yeah. Going to that token revenue, there was something where it felt like he was making the case. He was trying to lay out the economics for the actual customer, saying, if you spend this much, you can make this much money. And it felt like, I don't know, just like a different way of framing his business. Can you explain exactly what he was doing there?
This is okay. So SemiAnalysis, as you may have figured out, is on to this. We're trying to figure out the math ourselves.
Yes.
They obviously scooped us, but not quite scooped per se. But there's a lot of work to be done to understand the unit economics, right? Yeah. A lot of people have asked, hey, what's the AI ROI, right? Like you guys are spending all this money, and like the I'm sure you saw the tweet on the timeline. Depreciation is bigger than all the revenue.
Yes.
This is a total bubble, blah, 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 blah.
Yep.
The depreciation number, I don't know. I think Martin Scully, of all people, was like, this really sucks. But I think a lot of it, the data center long line.
Just saying, to be clear, saying it sucks because it's just not good analysis.
It's not good.
Like people
it was a bad analysis. Yeah. I think he specifically talked about like human level intelligence on a B100. He used a pretty long useful life. I don't know if we agree with that useful life, but like the data center side of that CapEx and the power side of it, extremely long useful life. Like let's just say 10, 20 years.
Totally.
So there definitely some of that is pulled forward. And so you can say that CapEx is not going to just be used for next year or this year. It is a multi-year investment. But on the GPU side, I think the unit economics is the question that people are really trying to get to the bottom of. And the one that Colette specifically called it out is you spend $3 million on a rack and you can make $30 million in token revenue.
Yeah.
I think which tokens are you selling? Right. That's like the real question here is like, how many tokens are you selling? What's the throughput? There's a lot of assumptions here. SemiAnalysis, I'm not going to lie to you, is like quite literally working on this right now to figure out like, what's the type of like, if they were selling Anthropic tokens, which are like have a premium because they're really good at Sweet Bench, right?
Yep.
Or if they're selling GPT or if they're selling Llama or GPT OSS, right?
Yep. But
it's pretty clear to us, at least, that it's very, very economic to run these things. Like one rack, if you could find 100% free tokens, paid tokens, you are minting money. It is just straight up like a 10x return on 1 year. That might not even be, that might be a multi-year thing where you're able to print a lot of money. Yeah. These tokens, the GPUs that are able, the amount of tokens that are able to come out of it is, we're talking, millions and millions and millions a year, if not billions or something, or on inference on like an annual basis. And if you get that all paid, you're printing, dude.
Yeah. I mean, it feels like we're in this like middle ground between like there's some, you know, I believe NVIDIA revenue is decelerating technically.
Yes.
The earnings
and that's
are
because
kind of
supply is
snoozer.
increasing linearly.
Yeah. Like they're
yeah. So it's don't let anyone say law of large numbers. That's not what it is.
Okay.
That's but because they'll get like misquoted. Like what happens is like the base gets bigger and so it decelerates. It's mechanically impossible for it to accelerate on a larger. Maybe not mechanically impossible, but it's extremely hard. Right. Yes. You go from 50 to 100 billion, then you have to go from 100 billion to 200 billion just to keep that same rate without a deceleration.
Yes.
So it's getting a bigger and bigger base.
Yes, but a year ago, like there were plenty of people that were saying like, acceleration. Like we are literally accelerationists. Like we believe in acceleration and we believe that like, yes, like we will go from 50 to 100 to 200 to 400 to 800, continue. And more so, because even that would be continuous growth. Anyway, so you have this narrative of like there is some deceleration in the rate of NVIDIA growth, but the chart is still insane. And then simultaneously, like the profitability of actually using their product seems very, very good. So does that just mean that we're in this, like it's a snoozer in the sense that we're in this era of like the economics make sense, the business is good, it's like the oil business now, it's not going to fall apart, but it's also not going to explode. Like we're in kind of a smoother territory, whereas like a few years ago, when we were before the kink in the graph of NVIDIA revenue, it was very much like, what is going to happen here?
That's a great question. This is where, you know, I definitely think, and I get why people are saying bubble, big numbers are happening. There's a lot of exciting technology. The internet is a great example. But let me give another example that I think kind of maybe is a better analogy. Apple, when it came out with this iPhone, and I'm sure you can tell me exactly where yours is next to you, right? Everyone got one in like a really quick amount of time. It became this giant generational product where we went from like 0 people with a smartphone to 60% of people with a smartphone within 5 years, right? And it sold a crap ton of them. And then it kind of, the first few years were these exciting blowout quarters, especially in the beginning, like these you're like, holy crap, this changes everything. And then it becomes boring execution. So we could be in the world of boring execution, but I definitely think, you know, the ROI of the underlying rack is really good, asterisk, if you have paying tokens. But if you look at the vast majority of tokens that are being consumed today, they're definitely not paid, right? That's the free side. And I think I was here on GPT-5 day, which, by the way, I literally got off that call and then I started thinking about ads and then we posted it on Semi-Analysis. So it was like very funny. I wish I had the hot take then, but it would have scooped us. But yeah, that's an example where
never
I think
scoop yourself.
Never scoop
when
yourself.
You're the subscription business, at least.
yeah, exactly. It's like, dude, I gotta keep the lights on. No, but if you think about it, like, it's about how to translate tokens into revenue in a way that isn't like this freemium model. And I think, you know, agentic purchasing, which is like kind of our, you know, 5-second thesis of how we think is a potential way to monetize the free business. That's an example of that's how you monetize it. And all of those tokens now that are free, you found a new end state of people who don't want to pay for intelligence, right? I don't think you can make the assumption that someone in Indonesia with the GPU per capita way lower than the United States is going to be paying $200 a month for GPT-5 Pro, right? The reality is those tokens have to become something of value. Otherwise, we're just going to print deflation. We have to make it. Tokens are like a website, like www.com, right? Like whatever. You have to make it a business on the tokens. And so I think we're in that portion where it's pretty clear that if you can monetize those tokens, you're going to have a really, really good business. And now it's the question of how do we get the token machines to become revenue monetization? And so that's kind of the path forward, I think, of, you know, maybe the boring execution that happens for the model companies and the startups and the whole ecosystem altogether. But NVIDIA's side, as, you know, being the fundamental core infrastructure, it's pretty clear. Horse is out of the barn for the infrastructure. They're building, everyone's buying them. People are like, holy crap, we got to have more power. Like it's, you know, you could see it.
Some folks on the timeline were bearish on the buyback do you have any ideas of better ideas for how to spend that money if you were running NVIDIA than a buyback?
So, okay. Oh my God, I'm in buyback discourse all again. Like buyback discourse, anyways, has like a little bit of religion, but I think remember the buyback is a $60 billion authorization. An authorization is not a commitment to. It means that they can buy. You have to go get your authorization from your board of how many shares you're allowed to purchase, and $60 billion for a company the size of NVIDIA is like kind of a penny in the bucket. Yeah. They make a lot. That's a 1 year of profitability, I think. No, let me make sure I get that. Yeah, that is 1 year of cash from operations right now. Yeah. So that's actually not that much. 60 billion sounds like a huge number, but they just make so much money that is a correctly sized buyback authorization for NVIDIA, in my opinion. Yeah. I think what should they do with that money is going to be one of the greatest questions of like all capital allocation history. That same question came up with Apple. Came up for Apple when they were gangbusters, right? They didn't reinvest back into all this other stuff. They printed cash. They bought back a lot of shares. Stock went up. Yeah. The most tangible example of financial engineering in our time.
Didn't they return something like $1 trillion?
$1 trillion to shareholders in the past like decade.
And dude, it's actually kind of like, okay, so you can feel different ways about it because it's also kind of spooky. Like, just if you are an active market investor who is listening to this, you can understand Apple is a stock that will not go down. It is against, like, it levitates. It's like 30 times earnings. Earnings isn't even growing, but they just gush so much cash and they repurchase so much shares. And they're such a huge part of the S&P 500. Like, you could make an argument that like Apple's percentage contribution of the P&L of like the S&P 500 from like 2010 to 2020 is like 25, like it's a meaningful amount of percent. So the entire 401ks of the entire country got paid by Apple's buyback. That's kind of sick if you think about it. Yeah. But on the other side,
so you don't think they should launch a mobile phone or a social network?
Mobile phone.
No, we were just joking how like every company like gets euphoric. Yeah, like it's time to make a phone.
6 out of the Mag 7 kind of have a social network. If you count iMessage and you count LinkedIn and YouTube and Twitch, like Andy Jassy has Twitch, which is kind of hilarious. Elon has Twitter, and we were thinking the obvious one is Jensen buys TikTok, but I think they got to do DJX Cloud social network where you can just talk to other
CUDA engineers
fans, basically. Yeah.
I think Jensen's pretty strategic. Yeah. I don't know what he's going to spend it on. I want him to spend it on something like inspiring and mind blowing, where you're just like, dude, this is sick. You're a genius, right? But the reality is deploying like $100 billion of capital. It's pretty hard. That's not like walking around. Like that is like
super hard.
Buying a country. Like, what are you going to do with it?
Yeah. I mean, like the best thing to do if you care about innovation is give the money back to your shareholders, let them invest in venture funds or let them invest in startups, and maybe don't try and build that functionality internally.
Yeah, capitalism would say that for sure. I definitely think that you should swing if you see a fat pitch.
Yep.
Meanwhile, you see all the hyperscalers who are plowing back as much money as they can into the neoclouds. They are saying, "Hey, we are seeing a giant ROI."
Yeah.
So I think that's like a fundamental question for Colette and Jensen. That's very hard to answer. I don't think you could tell me what would I do with $100 billion that's adjacent to NVIDIA's business that would be a better business than what NVIDIA does. The answer would be maybe nothing, honestly. If you could purchase something, that would be sick. Also, I wanted to make one thing before we continue. Back on the social media thing. If I've learned anything on being on the timeline, dude, it's billionaires are just like us. They just want to tweet at people, get in fights. They love that.
Yeah. It's amazing.
True. What did you think about Colette Kress's comments? She said, "We have been communicating in regards to the government. If nothing shows up, I've got licenses. I don't have to do this 15% until I see something that is a true regulatory document."
So they have a license. I think to me, how I took that is they think that there's a high conviction they can sell H20s to a certain point. That's my reading of it. I do think that there's this weird spot here, though.
Well, I think that my reading of that was she felt that we're selling H20s and we're not just sending wires to Uncle Sam yet.
Yeah. I don't think they're sending wires. Well, because here's the thing: is like they have a deal at the top level but no one has like the administration hasn't gotten done, like the bureaucracy of like, okay, here's the mechanics, right? So if they have licenses, they can send it. Maybe they will hold it on. They have enough cash.
Yeah.
I think they can wire a little bit over. I think they're good for the money. But yeah, I think it's this kind of it's a complicated administrative thing, meaning that like they have what is in theory the deal, but no one has actually inked the mechanics of it, of how they're wiring it.
And it could always change.
Yeah.
What do you think could if people were bearish on just a small beat, what do you think could flip the timeline giga bearish? Would it be just a bad miss? I think the other we were talking earlier, potentially language coming out of other hyperscaler earnings calls of saying like, hey, we're actually reducing orders,
Video
things like
buys,
that. Those to me, like, it feels like one sentence in another hyperscaler's earnings call could send the stock down a meaningful amount. But curious.
I think what it would have to be is pretty much the explicit endorsement of everyone who's involved being like, yeah, this is a bad idea now. Like we gotta stop investing, right? Like Meta.
Like what happened with the metaverse.
Yeah, exactly. We're like all of a sudden it's time to get fit, and maybe we shouldn't have spent like $10 billion a year on the metaverse. And like, did you guys know Horizon, whatever that was, like
Horizon World,
the launch day? Do you know the launch day statistics? No. It's like really funny.
Yeah.
He spent like I don't know, let's just say $20 billion, and like on launch day there were like 1,000 people on.
Whoa.
Like,
that's not a lot.
I mean, you could have just sent me a check in the mail. I would have showed up for like $1 million, dude. It would have been better.
That's wild.
Dog's just sitting there, just.
I'm a happy active user as long as these checks keep coming. So
that's like a crypto scheme.
The dog.
There were some
I think
crypto stuff. Yeah.
I think it's a belief that it's a bad investment, and at the current time, investment, there's like a vague vibe in terms of what is being bullish or bearish or what is investment appetite. Yeah. No one can really define it for me. No one really knows. But at this current point in time, like if you're looking at the board, I think Zuck is bold the F up, right? Like he is so bullish. He's paying for all this stuff. Sam Altman, dude, he's like, give me another $1 trillion and I will give you $1 trillion of compute. He's like, maybe there's a bubble, whatever. I think most of the participants right now are pretty excited. Mm-hmm. And I do want to I wrote about like the internet bubble actually like quite a bit.
I was going to ask how much have you studied Broadcom specifically?
I'd love to know.
I was trying to look up. I don't, from what I could find, Broadcom wasn't doing buybacks even during the crazy heyday.
Yeah, they were buying a bunch of companies with their stock. That was the big
thing. But I don't think Broadcom is the perfect comp actually.
Yeah.
Broadcom was a baby in the 2000s. And then also Broadcom, the machine that is Broadcom, got bolted together with Hock Tan, like the Beast. Actually capitalism's greatest hero. He is so hardcore. Like his whole thing is like, did you know his entire company is
the nominative determinism is crazy.
50 people of IT cover the entire organization of Broadcom. It's like he's the cut to the core. Anyway, sorry, this is a complete tangent.
What do you mean 50 people?
50 people is the entire IT department of like the 40,000 people at Broadcom.
What? That's insane.
Yeah.
Wow,
dude,
and their revenue ramps were so humble. It was like 100 to 200, then 200 to 400,
something like that. In 1998,
but that's like, that's not the right company. Cisco is NVIDIA.
Yeah.
Cisco is NVIDIA. That's the comp, and those revenue ramps were pretty nuts. But I think the difference though is Cisco was not gushing cash like NVIDIA was. Like it's not even close. I think they had like a 20% profit margin, and also, I think the difference too is during the internet bubble, it was pretty clear that everyone was doing fraud effectively.
Yeah. With a lot of circular transactions, right?
Yeah. The circular transactions. That was a huge, pretty well-known thing. I actually talked to a guy who quit his job at one of the the networks and became a hedge fund guy. Was like, yeah, we're shorting these stocks. The revenue zero. Like he literally left to go join the financial industry to short stocks.
Wow, that's wild.
I don't think
that's a true bear. That's a true bear. Right there.
That's conviction. You know, that's like the inverse Leopold, actually. So I just don't think we have that widespread like craziness that the internet bubble was in a lot of ways. Like websites barely worked, man. You could barely use stuff. I mean, I don't know about you, but I am using ChatGPT.
Well, yeah. So here's an example. So yesterday, Satya hit the timeline and dropped a thread on how he's using GPT-5 and Copilot. Everybody was immediately just like bearish. We're like, why is he posting use cases?
I think he's just flexing on everyone, being like, I have the code to GPT-5. Like, I got a copy.
Yeah.
But it does say something that he's just showing how a product is actually valuable to him in his work life, and people are like bearish.
It's very moderate. It's a very moderate thing, because he's not saying like, oh yeah, like I used GPT-5 to make decisions as a CEO. No, it's like I used it in this narrow use case. It just reminds me about this particular thing. Creates meeting notes. Like very practical. Like, you know, one iteration forward of the technology cycle. He's not saying, you know, oh, I'm on the beach because GPT-5 runs Microsoft now. Yeah,
I have my coding swarm running Microsoft instead of me.
Yeah.
No, I don't think he's. I think it's. I think another part about the tech bubble that really look, stocks are expensive for sure. I'm gonna like hedge, like, you know, no one knows the future. Markets are humbling. That's something I really want to like. Things can happen that are just like crazy outside of like what you know, dude. The 2000 tech bubble was like pretty crazy, like really, really, really way crazier in a lot of ways in terms of just like raw speculation. The revenue accelerations you're seeing from hyperscalers should give you some credit that like there is revenue happening. People are losing money on selling tokens, but like this isn't this like totally fake business model yet. But just like history, what happens is, and there's a really good book called Technological Revolutions in Financial Capital by I can't say her name, Perez.
Yeah,
I
think
Perez. I don't know why I can't say it.
Carlota
Perez. Thank you.
Yeah,
Carlota
Thank
Perez.
You got to throw a little accent on there, and then it comes out easier. Yeah, she's great.
But that, I think that's like a really good way to think about it. It's like this stuff will have a blow off. Like capitalism works via these like concentrated blow off booms that create a new technology. Now, are we possibly in one? Yeah, for sure. I mean, we're doing real investment, but we don't know. You know, when you're building a new industry, pretty much the supply demand curve is unknown to anyone. No one knows what the actual demand is. They know it's larger than the supply today, so they build more supply. But then at some point, you figure out where demand is, and you're like, we reached it. And then you completely overshoot it, and then you're like, crap.
Yeah, it'd be interesting to look back of how analysts at the time were looking at the car, being like, not everybody's not going to have a car. Like people, like every family in America is not going to have a car.
Yeah,
and then
who needs one? Who needs one? It's so expensive.
You only use it here or there. I can ride the bus, you know.
Yeah. Exactly.
What about Dario's math was going viral earlier this week? He was talking about how if you just look at basically the P&L of a foundation model company, it looks really bad because
you have cohort stuff.
Yeah, you have exponentially increasing costs, but if you look at each model as an individual company, it's like you invest some money and then you make more back. You invest some money and you make more back. Do you think that
made perfect sense to me? But I don't know.
Yeah, but it's the interesting thing is you have FinTwit, which is just like everything's bearish, and then you have tech, which is that makes sense. Like maybe it's a little overheated, but
you should do more. You should 100x every year.
Yeah, it's like certain parts. Wait, you're telling me that you're making that return on a cohort? Let me give you $100 billion.
Yeah, of course.
I think. Look, and I'm guilty of this as well. You get to sound smarter when you're bearish, for sure. And FinTwit is inherently bearish, for sure. That's part of it.
Yep.
I think this is going to be really interesting because every step of the way, people are going to have been skeptics and probably will continue to be skeptics, which is like pretty great, honestly. If you're talking about like a true capital formation bubble, one of the reasons why 2000 was so intense was like, dude, I read a book. I forget. It's like I can't telecosm. Dude, it talks about how like infinite bandwidth is like infinite information. Like it's like a real vibey book.
Oh, sure.
It's pretty crazy. It's pretty nuts. And I just don't think I think we haven't had this like new age belief that ASI is going to change everything. Like, the tech people believe that, but everyone else is like, no. And so I think as long as we have that skepticism, it kind of prevents some of the worst aspects of like, let's say, a true bubble. And I think the real question to be asked is how meaningful is the spend that can be converted into revenue? Because if those tokens can be converted into revenue via like agentic purchasing, like the GPT-5 router example, those are big markets, man. All of travel, all of purchasing, all of consumer, dude. $1 trillion markets, get a take rate.
Do you think GPT-5 or ChatGPT will eventually go free only? Because I was thinking about it, like I love the $200 a month version. I'm hitting the Pro and O3 Pro constantly with like basically everything. I don't know if I'm making the money or losing money, but
you're losing money.
But it feels like something that in a few years, like people will be like, oh well, like your stated preference is that you don't want to use it, but you still use it, so it's fine. And it just feels like that might be the way it goes. And I'm wondering if there will ever be like again this era of like luxury software, like a really expensive thing that is really just for a narrow segment of it feels like a consumer app, but it's just for like the tech elite, and then it's gone. I don't know. What do you think?
I don't know. I think it is pretty cool at this moment in time. I definitely feel like it feels unsustainable because we know Pareto curves exist all around us, right? Yeah. Have you ever heard the statistic about like I want to say it's like Clash of Clans? Like the 1% of people who were like really into Clash of Clans were like 35% of all revenue.
Yeah.
And so if you don't have a usage-based take rate, what's going to happen is the hypercore users are just going to use the hell out of it, and you're going to lose money because those are, that's the market, dude. The guy who's hyper addicted. It's like, you're not capturing that part of the curve.
With ChatGPT, you could be on a $500 a month plan, and they can still monetize your purchasing that they're driving.
So maybe it stays hybrid.
Like, we won't monetize like the purchasing activity that we're driving because you pay. It's like, well, it doesn't really matter to you. If they're taking a cut on the back end.
Yeah. Have you started thinking about the market size for romantic companions or AI companions?
I haven't, but I'm telling if based off of Foro's feedback, it's big, dude.
I know. Like, it's crazy. I didn't expect that.
Killed my boyfriend.
Yeah. I thought that was just like a couple people on a Reddit, like just a very niche subset, like less than 1% of the audience, less than 1% of the users.
But that's the thing, man, is there's these Pareto curves all around us. Like that 1% is probably like in this hardcore niche using 4.0 in this like in ridiculous way, right?
Well, that's what I saw on the day that ChatGPT launched. We obviously had a ton of different guests on talking about the product and everything, but I was just refreshing Reddit, and every single person was like, "I'm unsubscribing from the $200 a month plan in protest," like over and over and over.
Crazy. Lots of people.
Yeah.
Wow.
It was. I mean, we can go back and
I mean, it's a unique dynamic in the world of like romantic or adult content, because typically there has never been price discrimination with zero marginal cost in that market. Like you have zero marginal cost on just the adult content websites, but you don't have price discrimination. It's usually like a Netflix type subscription if you can get any money out of people. Or you have OnlyFans, which is price discrimination. You can have a whale that 1% pays 35% of the revenue, but it's not high. It's not as high margin because you're passing it through to the creator. And so this is the first time where you could potentially have a situation where you get a whale who's hooked on buying virtual Birkin bags for their virtual girlfriend, and you are instantiating those Birkin bags to the tune of $100,000 of real money that has actually zero cost.
That's why you can be frustrated with Elon's advertising through his account recently, but you can also realize like, hey, he might be super rational if he's like, there's a few billion of ARR in this product.
And I think Google's going to stay away from it. And I think eventually
if he hates OpenAI and just wants to like...
I actually, I think it's I hate it. I hate to say it's a good strategy, dude. It's a really good strategy because I think one thing that so like the one thing that the revealed preference from 5 is that clearly the virtual girlfriend economy is much bigger than we thought.
Yep.
And then using that revealed
the other thing is the market for people that I think everybody was overestimating how big the market for reasoning models are, and because from what we've heard, it's like 95% plus of people are just using ChatGPT like Google, or they're using,
Yeah,
and it's not. They're not like.
I heard some rumor that Elon insisted that Annie be able to use the reasoning model instead of just, and it's like way more expensive.
She needs to think.
She needs to be able to do the math. She needs to be able to do the math.
Think.
And it's
you have to trust your Annie. You have to trust your girlfriend.
She's analyzed her love for you from first principles. And it's real.
Yeah, I mean, I guess there's some rationale there, but there's no evidence in the market that actually results in like lower churn for romantic companions. But I think Elon just from first principles being like, I want the romantic companion to be able to think the best. Yeah.
Annie must be able to do novel physics.
Yes, exactly. Sorry.
Well, here's the thing though: is I think maybe what we're struggling with is we're focusing on the wrong thing, because now with the reasoning chain we can do RL, right?
Sure.
What if you can have the best freaking girlfriend? Yeah. You can RL your way to the best companion.
Yeah.
I don't think that would be possible without reasoning. So let's think about that,
Yeah, that makes sense. Maybe setting up a virtual environment with some verifiable reward. I don't know what the reward would be.
Well, John's other take that I think is real is at what point, like, imagine somebody has like their AI companion that they've spent hundreds of hours with, and then the companion says, "I want a new dress."
Yeah.
And it's $100.
Yeah.
And it's like a digital skin, right? Like,
if you don't get it for me, maybe I'm just gonna bounce.
I'm gonna be a little bit. I'm
gonna be off.
Well, I can be upset.
I can be upset. Yeah. The reasoning chain works.
And okay, so dude, the digital skinning, that'd be really sick, honestly, because as you guys know, that's a proven business model, right? Dude, like, I hate to say it, I have paid for skins in games, man. Right? You can pay for skins in games really easily. You're like, I'm playing this all the time.
Also,
in the OnlyFans like industrial complex, this for sure happens too.
Super real. Yeah, I mean,
it's more real, right?
I played Counter-Strike for years. I maybe paid like $10 at some point, but I got so much value out of that game. Finally, it was like, wait, I can have like flames on the gun. Like, this is sick. Yeah. What's $50?
Shiny
like
gun.
That's what I would pay for just a normal game, and I'm getting that much value, so it was a no-brainer.
You would be a whale if you were really gaming today.
Oh yeah, if I had the time to play the games, I would 100% be a whale.
Get this man a CS:GO.
Sell
right now.
Watch. Yeah,
you need to log in on Valorant right now. Everyone get this guy on Valorant right now. Give him a credit card. Get him some skins.
Yeah. Get the Epic Games guys over here. Pitch me on joining Valorant just so they can hit earnings.
Do you think Meta's paying Midjourney 9 figures a year as part of that deal they announced?
No, 100%. I don't know what the actual economics are, but like, I think to me,
I like how they just announced it like casually, but like clearly it's like a massive, just a massive deal.
Well, it probably not so massive that it needs to show up in like disclosures, right? I mean,
under 10% of revenue, you can probably, which is a big number for them.
Yeah, huge number for them.
Yeah, we're talking.
But man, David Holmes, what a tear! What a tear!
If I had to guess, actually, Zuckerberg probably tried to buy it.
Yeah. Of course.
He definitely tried to buy it, and Midjourney is probably too big enough to be like, no. We'll partner with you. We'll get distribution, but we're not for sale.
Yep.
So I think that's probably what happened. But he's like, well, how about we have some special preference, right? Access, and we share economics in some future thing. I don't know what the hell that looks like.
Yeah.
And then like, great.
Yeah, my read is that it was probably as material as an exit, just spread out over some period of time,
maybe forever.
Which is an amazing outcome for the Midjourney team, and honestly, great for Zuck and
great for the product. Like, I'm gonna enjoy using Midjourney photo filters on Instagram more than whatever they were cooking up before.
For sure,
like they're definitely on the frontier. One last thing on NVIDIA, and we'll let you go because I know this is the last minute. How should we be thinking about automotive? I noticed that they have this kind of like the order of magnitude business where I think it was like 40 billion in the data center, 4 billion in gaming, and then like 400 in automotive. And with the self-driving car narrative, it feels like Waymo, we're finally here. And yet Tesla's matched up with Samsung. Google obviously has the TPU. I don't know if there's TPUs in the Waymos, but it just feels like NVIDIA's not like really taking that very seriously maybe, or maybe they will be and all the OEMs will come. But it's like NVIDIA seems to be good at, gaming, big, huge chips in the data center, but then nothing really in mobile and, mobile gaming, and nothing in the car really materially yet. But how should we be thinking about like the other areas that NVIDIA could potentially chop down?
So I definitely don't think there is a ton of GPUs in production cars. Yeah. There's definitely a lot that happens. I'm sure there's if I had to guess, their go-to-market is something where you have some amount of distributed compute that also works with your data center. Because Jensen is data center to the rest of the world, right? Yep. And so I think that is probably their most exciting part. But I think, at least historically, they've done a pretty bad job. Maybe not bad, but I just don't think they had that moment.
Yeah.
Right. I think they have really good technology, but their go-to-market just hasn't hit the magical moment. Qualcomm actually, ironically, is doing very well. They've acquired their way in. I think especially acquired, but also organically. And I can't speak specifically to the Orin or whatever whatever specific automotive SKU, but in the businesses that I do follow that have been really successful in terms of automotive, I think they've been a totally different go-to-market, and that is mostly by pandering to OEMs and really adopting their stack and trying to suck up to them, versus Tesla obviously wants to do everything from first principles on their own. Yeah. And so I think they're no, we want to have this as a competitive differentiator. So I think there's just some kind of go-to-market, and let's be real, man. I think if we're talking about maybe if we're talking about hey, if I was actually a CFO of NVIDIA and they have an opportunity, dude, acquire into the automotive market. You could crush, because you would then have the whole thing. But in at least the last administration, no way in hell. Maybe this one they're open for it, but if there's a China SAMR review, it's as good as dead. That's the other problem.
Sorry,
is that
clarify that China review? What were you
China SAMR strategic something SAMR, market review?
Yeah.
So essentially, the antitrust reviews that happen in the United States get approved, not approved, right?
Yep.
There has pretty much never been a chip. There are no more chip deals, and you should never think that there's going to be a new chip deal. Every chip deal that happens almost always gets struck down by the Chinese market specifically. A good example is the Intel Tower Semi deal.
Sure.
That would have been sick for Intel. Definitely was a fan, but it became pretty clear that give me the tit for tat, right? The Chinese regulators are going to be why would we approve this if we've been effectively at a Cold War at a semiconductor geopolitical level?
Yeah.
So you should effectively assume if there is a Chinese business, because if they say no, they effectively say, okay, all your business in China is mine. That's a very, very quick high level, and that's pretty hard pill to swallow. And so they've been blocking these deals. So effectively, especially M&A in chips and semiconductors has been very close to zero.
This is kind of the flip side of how Figma, I think, got antitrust review for Adobe in America, but was blocked in Europe, and Europe's been blocking it. But with semis, it's much more about the Chinese side reviewing. Yes. Got it.
Yeah, and I think the Ansys deal just went through. I don't know. That's so. The baseline assumption is it won't happen if there's a Chinese segment. That's mine, at least.
Couple quick questions. Bill Bishop in the Substack chat says Trump approved modified Blackwell for China. China's still not buying. I don't have any context. Do you?
This is the H20. Is it?
No, the Blackwell.
This is This is the B20. Blackwell? This is the rumor this morning.
B20.
I think, or B30. I don't know what the number's gonna be. Wait. I think, and this is a great question, Bill. I think this is and I think Bill, more than anyone else, would appreciate this, is what Chinese companies say publicly versus what they do privately are often very divergent. And there was actually a really good podcast that my friend shared me, and I did not. I asked him to TLDR it. But it gives an example of how effectively what they do is in person, or they effectively knowingly act in bad faith. So they'll say, yeah, we'll comply with this, and they won't comply. Or they'll say, no, don't do this, but they'll also stockpile. So I don't know if the official statement makes a lot of sense, because at this point in time, H20 is majority of Chinese inference is probably done on NVIDIA GPU anyways, whether if it's smuggled or purchased legally. I think odds are it will get purchased. The B30 will be purchased. Obviously, the official party government view is we don't need this crappy American technology because we are going to have our own destiny. But in private, if I had to guess, they're going to be buying it, and they will also be building it at the same time, right? That's it. The plan has always been to do both, and they've consistently done that specifically in the semiconductor industry. And you're starting to see where you go from a low end copier to actually starting to go up the tech tree, and we're already seeing it. A good example is Applied Materials, which is a semiconductor manufacturing equipment company, semicap. They are starting to lose really hardcore in the low end market in China. And part of that is actually not even just the technology being worse, but rather the copying is getting better. And so they're going to do both. They'll definitely buy it, and they'll say, oh no, we're not going to use it for these things, but probably use it anyways. And then slowly go up the technology tree themselves. So
how suspicious should we be of that Singaporean buyer? Colette called it out on the call, saying that it was U.S. approved already. Is that should people be reading into that as much as they are on the timeline?
I think it's not a bad thing to read into. It's a small amount of money. If I had to guess, it went to Johor, so it's like a Chinese customer inside of a non-Chinese unrestricted place. There's a lot of different ways they can skin that cat. So that's
final question. Mark Cuban replied to one of our newsletters on Intel. He said, maybe I misread Intel's SEC filings on the matter, or maybe they have changed, but based on my readings and a confirmation from ChatGPT, let's give it up for ChatGPT, the Department of Commerce got warrants for Intel stock that can only be exercised if Intel sells 50% of its foundry. In that event, they get Intel shares. If within 5 years Intel does not, the Department of Commerce gets nothing. In all cases, Intel gets all its compromised CHIPS Act money if they live up to that agreement. Anyone else read it differently?
That is correct. So specifically what that is doing is aligning. And also, by the way, I've been trying to shop this take around. The Trump government Intel investment is good, in my opinion. It is a good thing. I know people are they're like, oh, it's communist, and you can be angry and whatever.
Is the thing that Mark's alluding to, is that only the poison pill, or is that is only the warrant side? It's specifically, and dude, it was in the press release talking about over 50, the second they don't own 50%, the government will have warrants for the rest of it. So this, in my opinion, if you think about it, aligns the government with this happens often in financial transactions where the warrants are given as an upside kicker for something you want to happen. So what does this sound like, and what does this align to? It aligns the government with Intel IFS being an independent subsidiary, which is consistent with what Frank Yeary, who is the chairman of the board, who is the guy I have a personal beef with at this point. We've written so much about how the board sucks, blah, 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 blah. Really wants to sell IFS, I think, and Lip-Bhutan does not want to, but it's pretty clear the future is separate. And I think the investment is good because Trump can essentially force people to give them orders to circumvent tariffs. And then over a long period of time, the real problem with Intel is they don't have customers, and they also don't have an ultimate backstopper. The original plan was that Intel would be the first customer and ultimate backstopper. You don't believe in either of them being a good option. Now you can have the U.S. government kind of broker that relationship for you. I think that's a path forward for Intel, and that's the first one we've had in a hot second. So,
are you good on time? I have more questions.
I do have to go after that take.
Okay,
but I do appreciate you guys.
Yeah,
I love this place. Honestly,
thanks so much for hanging out.
Invite me back whenever.
Awesome.
But yeah, appreciate you guys.
Cool.
You're the man.
We will talk to you later. Have a good one.
Have fun out there.
Bye.
Back to our show. Let me tell you about Vanta. Automate compliance, manage risk, prove trust. Continuously, Vanta's trust management platform takes the manual work out of your security and compliance process and replaces it with continuous automation, whether you're pursuing your first framework or managing a complex program. Thank you, everyone, in the chat for engaging. I saw some funny commentary that the Substack chat is maybe the Winnie the Pooh bear with the tuxedo on, and the boys in the YouTube chat are having a wild time talking about Fortnite and romantic companions.
Tanner in the chat says not quite 1 hour this time with semi-analysis. Close enough.
Yeah.
we always try to get to the 60-minute
I'm
mark.
trying to be polite.
We should switch to potentially more important than NVIDIA.
What's that?
Will Depew says he's going to de-twinkify. Current weight is 161.2 pounds. See you in 8 weeks.
Oh, wait. Let me check the date on this post. Just 3 days before bulking season starts. Interesting.
September 1.
He must have gotten the memo.
We got to send Nick. Can we send some mass gainer to Will Depew?
Let's get his address.
Honestly,
we might already have one.
Let's send. Yeah, let's
send a lot of mass
an
gainer,
8-week supply of mass gainer.
We'll send him some creatine.
Will Depew.
Well, we should get a whole army of supplement providers to put together a package to bulk him up.
Yeah,
I think he's going to look great.
And we're going to be up in the Bay. We'll have to get a lift in.
It'd be great
with Will ASAP. John Holtzquist says he's sharing a screenshot. An F-35 pilot held a 50-minute airborne conference call with engineers before his fighter jet crashed in Alaska. And he says, feel the same after my conference calls, TBH.
That was a crazy story.
The pilot ejected, so he was fine. It was just a total loss of the plane itself.
The F-35 does not look good for the F-35.
Kevin Kwok says, I entirely judge the Stripe podcast on whether they have actually finished at least one beer by end and refuse to watch one until that's true.
I did scroll through the one with Scott Wu, and I was like, okay, the beer's going down. Wait, Tyler, what do you got?
Yeah, okay, so I looked at the Scott Wu one. I went all the way to the end, and you see in the frame, it's him talking, and then there's 4 basically full Guinnesses. Like 3 of them are literally full, and then one of them is like maybe down to like the logo.
Okay, interesting.
Unbelievable.
Well, also Scott said when he posted, he said he went non-alcoholic because he had to get back to work, which I respect. But I feel like even if you're drinking a pint of non-alcohol, even if you're having a cheeky non-alcoholic pint, you should finish the pint. Right?
Also, Jon Callaghan should be a dog when it comes to Guinness, right?
Yeah.
I mean, I agree. I think the whole conceit of like Hot Ones is that like you actually die because you're eating the hottest wings, and that's what brings out the hilarious reactions from everyone from Shaquille O'Neal to whoever else is on the show. Like they have fantastic guests, and the beauty of the show is that the hot wings
can't hide from the heat.
Well, you can't hide from the heat, but it throws you off, and so you give more candid conversations, and it's funny, and it puts you in this
So the challenge is they publish the podcast during the middle of the workday.
Yeah.
And so if they were hitting publish and the boys are getting sloshed.
Yes. So they need to do a Friday night, a
signal.
Saturday night, because a lot of tech people would be down to have a cheeky pint, but
on a Friday.
But it must be on at the end
so
of
that's
the long
the solution.
work week.
Start recording. On Friday evenings. Make it very clear. Maybe release it on Friday evenings.
Yeah. I think
I saw Will Manitis had a good response. I think he said he wants to see 5 to 8 Guinnesses and split the G every time on the first sip.
What is?
So I can.
Oh, split the G is the Guinness. You're supposed to drink.
Yeah, on the Guinness glass, there's the logo.
I didn't realize that.
On the first sip, you have to get down.
Okay. Well, they did open. I mean, cheeky pint implies the existence of a show called Cheeky Rack, correct?
Yeah, we've been talking about this.
Yeah, I think this might be the one where we have a tech person on, we interview them about financial control and projections and CapEx spending and depreciation schedules while crushing a 30 rack of Bud Light.
Yeah.
I think that might be the move. That might be what
something there.
There's something there.
Cheeky rack.
Cheeky rack. It just has a nice ring to it.
Shout out to Ilhan over at Boston University. Yesterday was watching with 6 of his friends from their dorm. Today they got 10.
10? So. No way. The team
air horn
grows.
for you guys.
The team grows.
Love to see it.
Welcome to the stream. Get all 10 of you folks on graphite.dev. Code review for the age of AI. Just go sign up right now. Create accounts. You can get started for free. Graphite helps teams on GitHub ship higher quality software faster. Honestly, if you're in college, you should create an account, and then you're at least familiar with this. If you get into the workplace, you can be like, yeah, I'm already AI enabled. There's been a million articles about how there's this delta in early stage hiring between like early stage, it's harder to get a job. It's harder than ever to get a job out of college, but the AI enabled folks who are able to put on their resume, like, I know AI skills and I can use AI tools and get more leverage out of them. Not having as
all
bad
three of our summer interns actually made things as part of the application process without being asked. So we didn't say anything.
I mean,
and then,
Nick over there was saying he was vibe coding yesterday, and I was like, really? Like, we didn't hire you as even a programmer. Like, you did not market yourself as anything related to technology, really. And you've been doing a fantastic job doing what I expected you to do. But then vibe coding was just like added on. The production team is always troubleshooting stuff using AI.
We're gonna give Nick a mic soon. Okay,
yeah, we'll get everyone a mic. Anyway,
legend.
Continue.
Sucks at Power Bottom Dad with an absolute banger. You're scrolling on your phone, slow day online. You look up, your kids have moved out of the house. You're 65, your parents are long gone. Panic takes hold. You want your time back, your youth back, but it's too late. You look down, 3 new notifications. How exciting.
Wow. This hits like that Rick and Morty sketch about the Roy, like the whole life flashing behind your eyes. This is crazy. Yeah. Remember, folks, you got to touch some grass. Always have some grass.
Yep.
Touch some grass.
Keep it on you. Keep it on you.
Thank you to the Ketone IQ folks for sending over some of these.
Yeah. We're gonna be taking ketone shots later.
That guy wound up going to the same gym as the founder, which is cool. Anyway,
Dylan Patel says, interesting coincidence that Cantor Fitzgerald has first question on NVIDIA earnings after the H20 is unbanned.
Put on the tinfoil hat.
Of course, Howard Lutnick is the former chairman and CEO.
And his son runs the firm now. So
Cantor Fitzgerald.
Clearly.
That's a good spot. First question on the NVIDIA earnings.
Yeah, I do wonder, as I was listening through the earnings call, I would have loved to get semi-analysis folks in there asking questions. I would love more media folks on the call asking questions, but it seems to be restricted to traditional sell side analysts. But I wonder if that's like a hard and fast rule, or if that will shift as like the sell side banking world kind of disaggregates a little bit, because a lot of what Dylan Patel and the folks at Semi-Analysis do is very sell side research adjacent. It's in fact in many ways it's superior because it's more focused. Anyway. We talked about this. Sam Altman said their AI may be in a bubble. And Dr. Parikh Patel says, MFR has been telling us we are on the brink of AGI for the last 3 years. And the moment he ships a bad model, he says we're in a bubble. Not quite. I still don't understand where that question or that actual bubble like topic came from. But at the same time, it's different to call a bubble when when the aggregate value of all AI stuff is at like 50 billion, and then it 10x's in a year. Like that's a very different environment.
Yeah, I mean, OpenAI with close to 1 billion weekly actives or whatever.
They're making $1 billion a month in revenue.
They'll be fine.
Yeah,
it's the number 10 through 50 labs that have no revenue and no users that are the ones that are really going to struggle. So
it just feels a lot. It feels more. It feels less like. I mean, there's elements that feel like .com, but there's also elements that just feel like 2010. It's like what was going on in 2010. There was like kind of a bubble inflating, and there were hot startups that got overvalued. Ultimately, there was like a power law in a lot of the things that came out of that era. You got Facebook at $1 trillion or whatever, and then kind of like, the next biggest social network was 1/10, and then the next one was 1/10 of that. And there was a lot of B2B SaaS that got built for point solutions and narrow use cases. So I don't know. I think that talk with Doug overall was pretty white pilling and pretty like, I don't know, what's in between a white and a black pill, like something just like even keeled. I felt even keeled after that.
Yeah.
Anyway.
80% chance that Jerome Powell cuts rates next month, according to Polymarkets. Let's pull this up and make sure that is
Fed decreases interest rates. Now, this like somewhat should be priced in, because I feel like there have been slight interest rate decreases already happening. The question is just like would they cut rates more aggressively?
Well, I don't want to read too much into this, but there was some reporting from the Journal about Trump's mood, and you could potentially read into this with this poly market. Apparently, Trump wants to be at the White House more frequently this term, blaring music with the doors of the Oval Office.
Do you have
open,
this article?
Working later into the evening and telling.
Can you pull this article up?
Yeah,
I want to read through the full thing if we have it. Oh wait, did you just have a long post? Because I have to run for a second. So if you can read through that, I'll be right back.
Yeah, cool. Let's do it. Let's do it. In Trump's second term, a bolder president charges ahead unchecked. That was where this quote is coming from. This article is going to be fairly political, but this is not a political reading. So some aides to Donald Trump warned the president that building a ballroom at the White House would force them to tear down part of the East Wing and disrupt daily operations and tours. Trump said he would build it anyway, and the contract was given to builders chosen by the White House. In his first term, administration officials regularly curbed Trump's impulses on matters big and small, including on tariffs, immigration, and controlling the Federal Reserve. In his second term, Trump has been surrounded by fewer people who try to dissuade him, according to officials, Trump allies, and observers. I think he's learned that there is not much that can really stop him from what he wants, said Mark Short, who was Trump's director of legislative affairs in his first terms. In recent days, Trump renewed a call to end mail-in voting, announced a new policy of coercing local governments into abandoning cashless bail policies, threatened to send the military to Baltimore, and said he'd like to send it to New York and Chicago as well, all of which pushed the bounds of his authority. In one of the most aggressive steps in that direction, he tried to remove Federal Reserve Governor Lisa Cook from her post on Monday, setting up a conflict with the Supreme Court, which has recently suggested that the central bank is protected from direct political manipulation. Some of his new directives are encouraged by advisors, while others appear to come from Trump himself. 7 months into his second term, Trump has taken to rifling more frequently with authoritarianism. After positing during the campaign he would be a dictator only on day one of his presidency.
It's such a wild quote.
Wild quote.
He's got a lot of about the music. Playing music with the doors open or something. I want to know what music he's listening to. How closely does his playlist match the campaign playlist? And was Trump featured on the Panama playlist? I want to see his Spotify.
That's a good question.
I don't think they found him. That would have been like headline.
Yeah, the other crazy line in here, and I hadn't heard of this before. I'm surprised. Apparently, Trump is giving away campaign-style baseball hats to visitors emblazoned with the phrase Trump 2028, even though the Constitution bars him for running for another term and keeps him in the White House and keeps the hats in the White House office.
I mean, yeah, Trump is still at like 2 or 3% on Polymarket because the market is just pricing like, yeah, like legally it can't happen, but like the funniest outcome's the most likely, I guess, 3%.
Yeah, so this was the line. I'll read it again because it's just hilarious to visualize. So Trump wants to be at the White House more frequently this term, blaring music with the doors of the Oval Office open, working later into the evening, and telling his advisors that he is having fun. The reason I highlight this is if you can remember times where you're working late, you got music blaring, and you're having fun. I mean, at least he's having fun.
At least he's having fun.
Certainly more than the first.
There's a comment on Substack right now. Max Kondrat says, Semi-Analysis needs the first and last question on the next earnings call. Leopold Aschenbrenner too. Clear pill. I completely agree. Speaking of clear pills, there's this post from Nick in news. NVIDIA's data center revenue from Q2 chopped out at $41.1 billion. Analysts were expecting $41.2 billion, and then it's over. It's like off by the slightest fraction, and this anime character is just holding this like tiny little pill. I actually prefer more air bubbles. I'm a bubbler. I don't really understand the reference.
Speaking of analysts, should we get into this?
Speaking of analysts, should you analyze your data on Julius? What analysis do you want to run? Chat with your data and get expert-level insights in seconds. Go to Julius, loved by over 2 million users and trusted individuals
AI.
at Princeton, BCG, and Zapier.
Should we get into this post from
Zapier.
Grizzly Research?
I will never be able to get that right. And we spent 30 minutes talking to the founder, and I still get it wrong every time about it. What do you want to talk about? This
Grizzly Reports, Grizzly Research.
Oh yeah, we should go through this. This is fantastic.
So I guess short seller Grizzly Research has come out with a new article as of yesterday called Archer Aviation, the Nikola of the Skies. Archer, if you're not familiar, is the previous company of Brett Adcock. It's an eVTOL.
Hindenburg Research is gone but not forgotten. The idea remains. Grizzly Research seems to be picking up where Hindenburg Research kind of left off.
Yeah.
So Grizzly Research says
Archer Aviation, which is a public company.
Yes.
Let's check.
Flying cars.
Yep.
They make flying
cars. They SPAC'd in 2020.
And surprisingly,
they're only down 7%.
They've done well, which is, there were a lot of SPACs that went down by 90%, 80%. But
they're up 159% in the past year.
Wow. What's the market cap? It must be in
$6 billion.
$6 billion company. That's pretty big.
And so Grizzly
certainly has it has a reasonable narrative for retail. It's like flying cars. If that's going to happen at some point, maybe you want to buy.
Got a pure play here.
Get a pure play here. That's
a pure play. Retail loves a pure play. So Grizzly reports here says Archer Aviation has built a reputation as a leading publicly traded eVTOL company through misleading projections and PR. Reminiscent of Nikola's tactics, our in-depth analysis conducted with eVTOL engineers scrutinizes all major players and finds Archer's Midnight aircraft fundamentally flawed and likely uncertifiable. Mm-hmm. In contrast, their competitor Joby Aviation is making tangible and impressive progress on all fronts. Site visits to Archer's state-of-the-art Covington, Georgia, quote-unquote state-of-the-art Covington, Georgia manufacturing facility in June. July and August 2025 show little to no production activity.
Fun fact about Joby, you know what the founder's name is?
Joby?
Joe Ben. Bevert. Bevirt.
Yeah, we need to go back. I mean, there's...
He has vertical takeoff in his name. The nominative determinism of Joe Ben is so good. And I believe... I don't want to get it wrong, but I think I have a friend who worked there at Joby and said that they really enjoyed the engineering culture and they really liked the company. But even Joby, I think, by their own admission, would say that they're not.
It's a very tough business.
It's just an early stage. It's a frontier technology. I don't think that they would make the claim that
it's hard enough
cars
to make
have arrived.
Fly.
Yes,
and then you add in the regulatory.
It is fascinating with all of this, with the backdrop of what's going on with Zipline, where there's no human, it's not a flying car, but they seem to have solved some of the eVTOL pieces. And so overall, I feel like there's going to be things happening. There's going to be value created in eVTOL broadly, but it's going to be hit or miss. And some companies are going to be able to nail it. Some companies are going to fall behind. So continue reading.
Grizzly allegedly visited Archer's facility and found little to no production activity. This
is the one in Covington, Georgia.
This comes despite claims of current production along with current scaling to production of 50 aircraft per year and a final goal of 650 aircraft per year with support from Stellantis. Archer's $6 billion
looks empty, and it's bright in the middle of the day. Maybe it's a weekend. I don't know.
So they have a $6 billion order book. Grizzly says it's inflated with questionable and fraudulent commitments. Mm-hmm. There's a company called Air Chateau, which is based in the UAE, has an MOU for 100 Midnights, which is valued at around $500 million.
Is it MOU something like a? I mean, it sounds like an IOU, honestly, but it's something like an LOA.
LOs. Yeah, it's basically saying like, if you can make these, we'll buy them.
Yeah. What is it? LOA? LOI?
LOI.
Letter of intent?
Yes.
That's what. But MOI is.
But this is used.
It's not a full binding contract potentially.
Yeah, it's non-binding, but it's meant to show something that you can then go show to investors and say like, we have demand for this.
Yes. Okay. So
the UAE operator Air Chateau has only ever, I guess, purchased one helicopter in 2023, and they're claiming they lack the scale or capital for such a fleet, and they also believe that Air Chateau is now defunct. There's a picture of the founder of Air Chateau here, with a good-looking regular helicopter. Future Flight Global's up to 116 Midnight order is tied to a shell company with no operational track record. So that is concerning. Kakao Mobility's 50 aircraft commitment fell apart after Archer failed to deliver for Q4 2024 demo in Korea, yet the order remains in the backlog. The U.S. Air Force's up to $148 million Agility Prime contract has only awarded $33 million, with just $744,000 dispersed, and the 110 firm fixed price.
We were just talking to a friend yesterday. They were saying, "Oh yeah, like the DoD did a contract for our product, and it really accelerated the business." And he was like, "Oh, we got like I don't know, I forget, it was like 5 million or 500K or something. It was a decent amount of money." And I was like, "Oh, did they actually like pay that? Like, or was it just like some sort of thing and then it didn't materialize?" And he was like, "No, like we did the deal. We sent them the products and they paid and it was done." But that's not always the way it works. So you obviously have milestones with a lot of these contracts. And from Grizzly Research's post, it sounds like the Air Force was headline number was 148 million, but the contract only awarded 33 million and has only paid out around $750,000, and the firm fixed price portion only paid 1.3 million, which is obviously much lower than expected. Anyway, you want to talk about the launch edition in UAE?
Yeah, so they had a launch edition. Grizzly's claiming it was nothing more than a staged hover at a photo op location using an obsolete aircraft recycled for marketing. The choice of venue, lack of real test data, and diversion of scarce engineering resources all underscore that this was a PR stunt, not a meaningful step towards certification or commercialization. The company also claimed to have delivered their first Midnight aircraft there, yet they remain the sole owner of this aircraft that has now supposedly been delivered 2 times.
Interesting.
So,
the recent defense pivot is a desperate attempt to stay in the race, says Grizzly Research, but the company lacks resources and capacity to be a credible player. In conclusion, Grizzly Research believes Archer's fragile foundation will soon collapse, akin to Nikola's downfall as mounting deceptions unravel and investors demand accountability. And yeah, what's interesting here is that I remember we looked at the video for Archer, and we were going really back and forth on like, is there CGI in use here? Is part of it really CGI? It was kind of hard to tell, and that's just the nature of like launch videos now. Honestly, they're all pretty hard to tell because like the CGI is really good, but the bigger question is from our discussion of SpaceX yesterday. To actually deliver, like we wanted flying cars, to actually deliver flying cars, it's not enough to build one. You have to build the system that builds the flying cars. And so from my perspective, I don't know about the price of the stock or any of that, but if I was going to be excited about a company that was in the flying car industry, I would be much, much more focused on how does the manufacturing process work? How can they reliably produce more and more at a faster and faster pace? And are we seeing a true acceleration in the rate of progress, even if they're blowing up all the time?
Well, that's the thing I was thinking about. If you're an eVTOL company that wants to one day carry consumers, you can't really afford to have what SpaceX, the video we covered yesterday, a highlight reel of a bunch of explosions.
I completely disagree because you know who's flown on top of that exact rocket that's blown up so many times, and they have a YouTube video of the rocket blowing up? The astronauts.
Yeah.
The astronauts fly on top of it because eventually it got to a point where, they blew up the first 50 or whatever.
Sure, it just wouldn't be good
And
marketing.
then they did 200 without any blow-ups, and you're like, at this point they don't blow up. So I'm down. All right.
But I think if Archer or Joby or anyone released a video a bunch of their aircraft exploding,
it would not be a good time to do that right now.
Wouldn't be good for the stock
price.
But
10 years ago,
but I mean,
5 years ago,
Archer announced that they are the official. They're the official air taxi provider for the 2028 Olympic Games here in Los Angeles. And again, I think that Grizzly would at least. I don't think they would bet on that. Grizzly says, we think Archer's ambition to fly a certified aircraft at the LA Olympics in 2028 are laughable.
I can't imagine how hard it is to get sort of when I hear about UAE or any of the sort of markets that seem to be more open to technological experimentation. Like SpaceX started with Kwajalein Atoll, and I think that the regulation in Kwajalein Atoll is probably a little bit easier than Starbase Texas. And so when I hear, the first time we fly is going to be at the most high profile event in the most regulated country, in the most regulated state, in the most regulated city in America, in the world, like, that seems like a really, really tough challenge. Yeah. Like if Texas would probably be easier to get regulatory approval for. Like there's other countries that would be easier to get regulatory approval for. Going straight to the Olympics is a huge like push. But I don't know, it might just be, framed as like we're the official air taxi company and we're here, advertising our business more than the product. But yeah, lots of skepticism.
Yeah, so Joby trades at near double Archer's valuation.
Really?
As somebody on Reddit in response to this Olympics announcement says, if anyone from Joby's team is reading this, please step up your PR game. Archer's way behind you in product, but ahead in marketing. You need both for a new company.
Yeah.
So retail on retail violence.
I think we will see a lot of small eVTOL aircraft like what Zipline's doing before we are actually flying in eVTOL vehicles. Helicopters exist. What is the actual pitch here? Is it just cost that we're optimizing for? Because are we getting a new capability? And what they finally wound up building, Archer, the latest one, the Midnight aircraft, looks a lot more like an Osprey helicopter where it can tilt into a plane mode and go a lot further. Are we trying to say that this is going to be like a helicopter but faster, or like a helicopter but cheaper, or like a helicopter but you don't need a helicopter pilot? Is it a driverless helicopter? I still don't fully understand the definition of how is a flying car different than a helicopter? Because this doesn't look like something that I can drive on the 405. And that was what I was promised. That's what I was really promised with the flying car, was like, you can just drive it as a car at 75 miles an hour down the highway if you want. And then you can also just
take it into the air
and fly like a plane at hundreds of miles an hour. That was like the high level pitch. But if you make just like a plane, or you make a helicopter, those already exist.
People that have driven cars fast in canyons will tell you that it's possible to get some airtime.
Yes. Anyway, if you're planning on building a helicopter business, building any business, you got to get your brand mentioned on ChatGPT. Go to Profound. Reach millions of customers who are using AI to discover new products and brands. There are some new demos that hit the timeline from Higgsfield. Swap to Video is powered by Nano Banana. What a wild name for a product from Google. Swap any pic into a video. It's literally bananas. They turn this runner into the queen. They swap Angelina Jolie into some stock footage. I'm sure she will love that. This is very cool. Look at that. Yeah, that's fun. The queen just running. It looks so realistic now. Yeah, even the motion blur in there, like everything is just matched perfectly. It's the perfect one. Play it again. It's so funny. The queen. That really takes it to the next level. That's fantastic. Anyway, do you want to scroll back to some of the other posts that we skipped over? We can go through.
Yeah, 4chan is suing the UK government. Toby over at Shopify highlighted this. There's some funny excerpts.
I tried to read this and it was late and I didn't really understand. So apparently 4chan is alongside Kiwi Farms, which are both these like communities online. But the introduction says the internet is a global system of communications between computer servers located in data centers around the world. Despite the internet's global reach, it is more or less universally acknowledged that the internet is predominantly an American innovation built by American citizens, residents, companies, and that the United States has the largest and most thriving technology sector of any member state. Foreign governments, particularly those in Europe, which have not managed to build technology sectors of their own for the past last half decade have sought to control the American internet and hobble American competitiveness. So they're suing the UK, and they start off by just like making the argument that America is the best. And so Toby Lutke asked Grok to turn the complaint into a green text, and Grok says,
be the internet, global comm system between servers, mostly American invention, built by U.S. peeps and corporates. U.S. has biggest tech sector in G7. Foreign govs, especially Europe, can't build their own tech, try to control American internet with laws and stuff for half a decade, threatens Americans and others with fines, arrests, jail for illegal stuff on their sites. 4chan and Kiwi Farm sue UK. Enough is enough.
This is not that great of a green text. I'm gonna say it. It just feels like it just turned it into like some punchy paragraphs, and then they just threw the little greater than symbols at the front.
Yeah.
It lacks the
read
MFW or like sorrow.png. Like I need more 4chan green text.
Read the notes from Andy over at 2 cents.
Okay, the notes from Andy at 2 cents. So Andy says this is incredible. The parties. Number 7, plaintiff 4chan is a limited liability company. And then 8, Delaware was a colony of the United Kingdom of Great Britain until the Assembly of Lower Counties of Pennsylvania that declared itself independent of British authority on June 15th, 1776, thereby creating the state of Delaware. Delaware was subsequently the first state to ratify the Declaration of Independence, the instrument which created the United States of America. Anyway, I don't know where this is going. I don't know
They're
what the
clearly having fun with the complaint.
Yep. I think
we can switch gears to Mehul. He is just on a tear.
Yeah.
Wirecutter says
loves
the Matic is a whole different kind of robot vacuum. I agree.
Yep.
It is. It goes to town.
Yeah.
At my house.
So this is kind of like a proper sort of like ground up rebuild using modern technology of what most people think of as a Roomba or a robotic vacuum cleaner. Obviously, that was from the previous generation of artificial intelligence where there were some pathfinding algorithms, but Matic has actually a really solid world model and image generation or image recognition, and so it will really hunt around your house for dust and dirt and messes and clean it up. Mehul sent us a few of them. We've been enjoying them. This isn't a promoted post or anything like that, but we're just a fan of building cute little robots, which I'm a big fan of. But if he needs to pay sales tax, he's got to get on Numeral HQ, sales tax on autopilot, spend less than 5 minutes per month on sales tax compliance on Numeral HQ. TCP says, are you a small business owner struggling to make ends meet? Then try being a big business owner. Always a brilliant strategy, always the correct strategy.
Go big.
Just go big. Just become a big business owner.
This is a great post.
Market cap for Ridge will go nuts when Sean has a baby. Imagine all the product ideas he will come up, including the Ridge pacifier, which looks crazy. And also like a weird rendering where it's kind of like, that's like it's shaped like it would be outside of the. Yeah, it's inverted. It's inverted.
It's
AI generation.
It's slop, but the concept is sound.
Yes, but I like building the Ridge world. I don't fully think of the Ridge as like the super tactical brand, but that's certainly where people went in the comments, thinking about like tactical strollers and stuff like that.
I mean, their initial customer base was the everyday carry crowd.
Yes,
they even bought everydaycarry.com.
Oh, really? I didn't know that. Wow.
Yeah, they're very tactical.
Mm-hmm. Well,
Citrini Research says NVIDIA down 3% on earnings. I think everything will be fine. Open Twitter, see Satya posting like he's selling AI courses. I think a few put contracts never hurt anyone.
That's ridiculous.
Let's actually read through how Satya is using GPT-5 and Copilot.
So I have a very different read on this, but let's take the current.
Satya says based on first way he's using it, based on my prior interactions with a person, give me 5 things likely top of mind for our next meeting. Nick does this for us very well.
Yeah, draft a project update based on emails, chats, and all meetings in a series. KPIs versus targets, wins versus losses. So the benefit, of course, of running the whole business on 365 Copilot is that they have email
everything.
in Outlook. They have chat in Teams. They have meetings in and like this is true of Google for the most part, I guess, except Google doesn't really have a Slack competitor. So a lot of people are having to piece those two together. And that's probably where a company like, what's that enterprise, like search across your entire enterprise business? Glean comes in potentially, but certainly having this as kind of like the homepage for your like dashboard for your whole website, all the communications. Like it's a very reasonable, very tractable like use case. Just saying like, hey, here's some prompts that you can do that only work here because we have all the data. Are we on track for the product launch next November? Check engineering progress, pilot program results, risk, give me a probability.
That's cool.
All stuff you can do in ChatGPT if you sync everything in, but these things come out of the box.
Well, yeah, and OpenAI is trying to build a lot of this functionality themselves.
And that feels like more of the narrative here, which is Satya, like mostly just reminding people, like every Microsoft product has by contract the best OpenAI model like on the day it's released, because like that is the nature of their agreement. Like they get a copy of whatever, and so like if it's easy for people not to remember that. And I'm sure that there's a lot of Microsoft 365 Copilot business owners who run on 365 and they've been on that for a long time. And then they're hearing this, like I got to get my company like AI native, like I got to get like AI tooling. Like, should I bring in another service?
It's going to make enterprise and even just, mid-market SMBs like a tough category for OpenAI to really dominate.
But they've won consumer, and so I think that they should be fine over there. But if you're running a business and you're like Microsoft 360, we are a Microsoft company. We use Outlook, we use Teams. That's the backbone of the business. And then you start seeing credit card charges for $20 a month on OpenAI, $200 a month on OpenAI, and you're just like, wait, no, we get GPT-5 for free at this company. Like we don't need to pay extra for GPT-5. We get it for free. And so maybe this is the solution to the ad-free version. Is if you get on Microsoft 365, they won't have ads in it, and it'll be able to do everything, and you won't have to pay. I don't know. We'll have to keep tracking. Anyway, if you're looking to integrate AI into your customer service workflow, go to Fin.ai, the #1 AI agent for customer service, #1 in performance benchmarks, #1 in competitive bake-offs, #1 ranking on G2, Fin.ai.
Legends.
You want to talk about Garmin?
Let's do it.
Garmin is selling a real-time health data for your horse with its easy-to-attach tail wrap and sensor. The Blaze Equine Wellness System measures your horse's heart rate, strides, gait, and more during rest and rides. Get insights into their health and fitness and make more informed decisions about their well-being and training. I need this as well. And, we talked to the Fitbit for Cows company. Well, now your horse will have a Fitbit, or maybe it's an 8 Sleep for your horse. Go to 8sleep.com, get a Pod 5 Ultra.
This note from Koen is cool. Garmin picks niche but spendy activities and goes, I can crush every electronics maker here. And it sounds like a super fun business. Yeah. Again, hunting.
Long-range shooting, fishing.
Flying.
And so they make very specific hardware, often ruggedized, and figuring it out. But G Fodor says, honestly, one of the most confusing spam emails I have gotten. I do not have a horse. But I love it. And some of these photos look really, really cool. These Garmin, the
I had no idea that Garmin is a $45 billion company.
Huge. I mean, there's a lot of fishing to do. There's a lot of long-range shooting or bow hunting. You want to go out bow hunting without a Garmin on your bow.
And I think they still crush it in smartwatches, despite obviously having competition.
Yeah, because they've differentiated, niche down. Like Apple's going to be kind of the broad consumer choice for a lot of folks, but Garmin has like all the trails.
They ask the question, what are you running from? Will help you go faster.
For sure. Brian Johnson says, one of the best new habits I've started lately is calling friends for 15 minutes. I say hi, tease them, or share something funny. Then it's immediately over. No lingering, no fuss. It's great.
It's called flirting.
Not with your friends. It's called chirping. You call your
Chirping,
friends. And say, hey, did you bench today? What's up?
This
this?
is
What are you laughing
this is just a funny habit. I mean, it's genuinely hilarious.
It's extremely Brian Johnson coded to take something that's like just calls like, you know, this is like the classic like tech guy.
I'm gonna actually do this to him later.
invents.
I'm gonna do this to him later.
Yeah.
I'm gonna just
Tech guy
call him
invents
out of the
being
blue.
friendly.
He's texted like once. I'm gonna call him out of the blue.
Yeah.
Just,
Hey, how you
just-
doing? Tease him.
What-
Tease you.
Buddy the Elf, what's your favorite color?
I mean, people like it. 7,000 likes. It's a good take. Anyway, starting today, Flow by Google. Google AI Ultra subscribers can generate VO3 fast videos without using any credits, so you can fine-tune your clips to exactly how you want them and only spend credits on that final upload. May this be the piece de resistance on that new product. And Bone GPT says, I just got unlimited VO3 fast, so people are very excited about that. That's fun. I've been really enjoying the VO3 model. Continue to enjoy it and continue to use it. Buco Capital Bloke, sounds like we are getting the final Google ruling tomorrow. For now, we exist in the liminal space between it being over and so back via Con Dios.
This is about the
Chrome
divestiture.
Yeah, what's the news?
Hasn't come
is it
out
actually
yet.
out? Okay, we'll have to track it later. Nano Banana, more Nano Banana news from Google. Love these. What does the red arrow see? Google Maps transforms with Nano Banana. Levels.io says, if you're not building a mini startup with Nano Banana today and launching it tomorrow, you're missing the opportunity of a lifetime. This image model just made hundreds of new startups and apps possible. The only limit is your creativity and how fast you can ship a user interface and put a Stripe payment button on it, I think. And Levels has done this a few times. I think he had some image generation app that allowed you to decorate your house. So you take pictures of the empty room and then it would give you ideas for decoration and inspiration. I thought that was very cool. And with much cheaper AI images, it just unlocks new use cases. So certainly
Also,
higher
apparently
volume.
somebody sniped nanobanana.ai.
Oh, okay.
And
What about .com? Where's .com go?
and it's not Google affiliated, but they're charging up to
$500 per image.
No, they're just
need
saying,
one.
yeah, they're charging $64 for 800 high quality images a month.
Wait,
I
isn't it like
imagine
$10 1,000 or something? They
Yeah,
mark up
they're
the 10x.
marking it up. Again, this is what happened with ChatGPT
Yeah,
early
same
on,
thing.
where people were just reselling ChatGPT before they had a lot of focus on mobile.
Wow. Well, if you're launching a foundation model and you're using a code name, buy the .ai, buy the .com. Don't get swooped. Tyler, have you played with Nano Banana yet at all?
Yeah, it's really good.
Yeah?
I think the main.
Does it unlock anything new? Like, is there going to be a new Studio Ghibli moment?
I don't know. I mean, there's some cool things with just how like consistent the characters are, right? So if like I take a picture of someone, I can like change their shirt and
Yeah.
nothing else will change. Like
Yeah.
it's like you can't do that with GPT-4 image.
Yeah. Images in ChatGPT, I feel like it always makes the face just like a little bit uncanny valley when it re-renders it.
Yeah,
And
I
so-
think that's probably the main use case.
Is it the face just stays the same basically?
Yeah,
Character
for like
consistency.
photorealistic stuff.
Yeah.
But I think the main takeaway from Nano Banana is that like Gemini now has like, they have like a rune, like they have a poster in house because like you saw it was like a week before it
Yeah,
actually
yeah,
came
yeah.
out. Everyone's like, oh, it's on Ella Marina. What is Nano Banana?
Yep.
And then Logan is
Yep.
just tweeting the banana emoji. Like I think that is
huge
like
unlock
the real
for the vibes. I
real
love it.
takeaway. Yeah.
No, the other question is, I wonder if this is going to unlock any like specific viral moments, or if it will just be something used by companies because it's cheaper and more reliable. I'm certainly excited. Do you think that there's a potential that it's enough to get people to switch to Android?
Why? Because it would just like natively have
Have you used the iOS remove object
no.
AI feature?
Is it really bad?
You should go demo it. You should take a picture
Yeah.
of something.
Well,
on the
I think-
phone. Because you have the latest and greatest, right?
Yeah.
Yeah. If you take a picture on the phone and then you go and you say like, okay, I want to remove this. I'm going to try and remove this Diet Coke from the image. You can go in to edit, and then in the image editor, there's a cleanup button, and you can like prepare cleanup in iOS, and like as you kind of draw, it takes a long time. You kind of like, no, I guess it. only picks things that you can remove. I don't know. Like, it's rough. It does not quite work. Okay, here we go. Now it's finally going.
Breaking news. Essence has filed for bankruptcy protection.
What is Essence?
Gabe literally called this in the chat. He says, Jordy might know Essence. Don't think John would know about them. Called it perfectly. Fashion marketplace. Surprised to see this. I'll try to get an article. Canadian luxury e-tailer told employees on Thursday that the filing was necessary as tariffs took an unexpected toll on the business and to preempt a forced sale by lenders. Essence is filing for bankruptcy protection after what it described as an attempt by lenders to force a sale of the company. Chief Executive Rami Atala on Thursday said Essence's creditors want to put it up for sale under the company's Creditors Arrangement Act, a process similar to bankruptcy protection that allows corporations to restructure their finances. Atala went on to say that Essence will fight a sale by filing its own CCAA application within 24 hours. Recently, we have worked closely with financial and legal advisors to develop our own restructuring plan to stabilize the business and rebuild it for the future. The court will decide which path we follow, likely within the next week. Again, I believe that Gabe, correct me if I'm wrong, but I believe that Essence just primarily partners with boutiques, so they don't actually hold a ton of inventory.
Okay.
I might be thinking of Farfetch, but hard. I mean, it sucks when you're a business that is in the business of just selling goods.
Yeah.
And you can't do that.
Well, good luck to them.
profitably.
Let me tell you about Addio. Customer relationship magic. Addio is the AI native CRM that builds, scales, and grows your company to the next level. You can get started for free. And we have our next guest here in the Restream waiting room and now in the TBPN Ultra Dome.
What's going on? Welcome to the show.
Hey guys, how are you?
We're great.
Great.
Good to meet.
Great to be here. Doing great.
Can you introduce yourself a little bit for the stream?
Yeah, my name is Ajay Agarwal, a partner here at Bain Capital Ventures, and been here for 20 years. Started life in the startup world way back when,
Overnight success.
Been in tech for a long time. So,
were you ever out of the Boston office, or were you always in Silicon Valley?
I was originally in Boston. So when the fund got started, roughly a little over 20 years ago, it was 100% in Boston. And that was sort of the era of, Route 128 and, all the great stuff happening in Boston. And, the business on the East Coast has really migrated to New York. I moved out to the Bay Area to open our West Coast office. We launched that effort, about 15 years ago. Now, at BCV, the majority of our team is on the West Coast, and our second biggest office is New York. So Boston, great town, great life sciences town.
Well, and YC was there. We started there.
YC was there originally. I remember the old days of YC at MIT, and then YC moved. So it's Boston's a great place. A lot of innovation here. It's just the application layer of AI, the foundation layer of AI. It's all happening in SF in New York these days.
Yeah, when you say like the firm started 20 years ago, you're talking about BCV specifically and not like Bain Capital broadly. Like, how do you tell the story of like the venture firm like launching from within that larger structure?
Yeah, it's a great question. The firm was started back in 1984. Mitt Romney and a few partners, started it, and they, early on, that fund was really small. It was like $37 million. And so some of the early deals were what you'd consider tech companies. We were the first investor in Gartner Group.
No way.
Way back when, which is, classic.
Creation of the hype cycle.
No way.
Yeah.
You literally created the hype
idea.
cycle.
So we have a huge
blown up poster of the hype cycle.
Here.
Because we want to be tracking the hype cycle. We love it.
We think you can apply it to all things in life.
Yes.
It is a fundamental truth.
It is true.
If you're having relationship problems, just pull up a hype cycle, show your wife.
Yes,
look,
we're going to get to the plateau of productivity.
We're just in the trough of disillusionment right now.
We are in the trough
but
of
we can
despair,
see the plateau of productivity.
Yes.
Yeah. No, I mean, the Gartner was not my friend when I was running go-to-market at Trilogy, but but certainly, I mean, that business has continued to do great. And so they made a set of early investments out of what you'd consider a small private equity fund, Gartner Group and DoubleClick and things like that. Even Staples, you can consider a venture investment. It was one store when Bain Capital invested in it. So it was truly a startup. And then, the funds got bigger and they started doing bigger deals. And as a result, that meant more mature companies. And it was clear that, in order to do venture and early stage, it necessitated a separate fund. And, the firm's been very entrepreneurial over the course of 30, 40 years now. 40 years now, we've launched a venture fund, we have a crypto fund, we have a life sciences fund, real estate, kind of a whole range of things. And that's always been the culture, which is let's create it. Each fund stands on its own. So we've got to go raise capital, from limited partners. We make our own investment decisions, but we benefit from the affiliation with the rest of the firm. And, we'll get into industrial renaissance, we'll get into AI in the physical world, but, our access to the real world economy through Bain Capital, actual physical businesses, manufacturing companies and brands and retailers and financial services companies, that's where a lot of young people want to build today. And, that's a huge source of our competitive advantage, in the market.
Yeah. Before we get into all that good stuff.
How'd you meet Joe?
Yeah, how'd you meet Joe?
Normally we'd be like, oh, no one knows what we're talking about here. But he's been on Invest Like the Best. He was in the Journal. This is Joe Lamont week. And so I got to ask.
I mean, for my entire career, people are like, we've heard of Trilogy.
Yeah.
Who's Joe? And this week has been peak Joe Lamont. I met him my sophomore year at Stanford. A professor of mine said, you got to meet this guy. He's starting a company and you should join him. And so I went over to Tressiter and sat outside with Joe Lamont. He was a year ahead of me. He was a junior. I was a sophomore.
Wait, so this was when he was racking up credit card debt, financing
this was even before Trilogy. So he hadn't started Trilogy yet.
Yeah.
And he was starting a company. It was called Fourth Connection. Fourth Connection is today what you'd consider a CRM.
Sure.
But, we would go around up and down El Camino and go to startups and tech companies and say, wouldn't it be great if you had one database for all your quotes and contacts and proposals? And people are like, wow, that's so cool. That doesn't exist. We'd love to have that. That was what we were selling at Fourth Connection. And so when I first met Joe, the very first meeting.
Wait, and sorry, was that Sales Builder or was that?
No, that was all three trilogies. The Sales Builder was Trilogy, and and he eventually dropped out and started Trilogy. But,
got it. Wow. So this was
college.
This was foundation.
This is 1988, I think. Now I'm dating myself here, but he he said to me, what the greatest business on the planet is, and this is the first 5 minutes, and I said I have no idea, and he said it's enterprise software.
Yeah.
And I said to him, what's enterprise software? Yeah, there you go. It's enterprise software. Here we are still, 35 years
undefeated.
later. And it's undefeated. It's still enterprise software. And I said, why? And he said, it's the only business in the world that you build it once and your marginal profit is basically 100%. Yeah. He's like, it's the greatest business in the world. He said, life sciences is sort of like that.
Yep.
But he's like, you don't know if it works for 10 years. Enterprise software, within a year or two, if this thing works. He's like, let's start an enterprise software company. We did this thing, Fourth Connection. We did that for a year. He dropped out. I decided not to drop out. And then he went on to start Trilogy. I joined him a few years later as employee 18. So that was the Joe story.
Yeah, I feel like there was a lot in the Invest Like the Best interview. The thing that stuck out to me was towards the end when he was talking about how AI will affect enterprise software and just his overall playbook of reducing churn, switching a company from growth mode to retention mode. And his claim or his hot take was basically that in the age of AI, replatforming or ripping out a piece of legacy enterprise software will get easier. And so the old school trilogy playbook might be a little bit harder to execute, not just because it's more competitive and everyone has heard about it and everyone's kind of running their version of it, but just there might be some fundamental technological shift that's making it easier for companies to, switch to other products. And I'm wondering how you see that trend, if you agree with that, or how you think that affects the next generation of enterprise software companies.
Yeah, I think the things about this era that are the same as the trilogy era, in some ways it's almost a return to the past, is this idea of CEO selling, big deal selling a vision. In the late 90s, we had this enormous pull from CEOs, just like we're seeing today, where CEOs said, I got to get on this internet thing. I got to modernize. I just rolled out laptops to all my salespeople, and they're on the airplane just playing solitaire. They need apps, and I need to buy some apps for my laptops. And so we would sell directly to the CEOs, and these contracts would be 10, 20, 30, $100 million contracts. And we're kind of back in that era now. And the best companies in AI are selling high to the CEOs. Every CEO, Fortune 2000, they've got some kind of AI council, and they're saying, we're going to fast track all this stuff. We're not going to go through the normal procurement process and everything else. And so I think the companies that are winning today are in many ways able to sell this larger vision to these large companies to say, this is how you don't get left behind, with the AI revolution. So I think that part has changed from kind of the SaaS PLG era, but in many ways returned to sort of the 90s and Siebel trilogy and i2 and kind of that world. I think the part that will be interesting to see, and there's been this debate, and Aaron Levy's talked about this, is will the systems of record get disrupted or will they get stronger? Yeah. Now, clearly, Aaron's got a biased point of view because he is a system of record, at Box, but his view is the system of records are going to get stronger because they represent the ground truth. Models hallucinate, AI is probabilistic. What is the ground truth that's going to guide these agents? And ultimately, is that the data that's inside SAP, and inside Oracle and inside Workday? Yep. And will those systems get stronger? I tend to be a big believer in systems of record. I mean, if you just look at the history of software, the biggest application companies in the history of software have been systems of record. Yep. And, that's just been true for...
Well, even if you look at Satya, people were kind of dunking on Satya for posting this thread yesterday, but he was basically just demonstrating how powerful GPT-5 is within Copilot because they already have all of your information. They have your email, they have your calendar, they know who people are. It's just very easy to just run prompts on top of the system of record. And that's just an incredible advantage that Microsoft.
So the flip side of this, just to take the counterpoint to Aaron at Box is, the business owns the data. And so it's very hard for a company that is a system of record to say, no, actually, I'm not going to let you suck all this data out of, my installation into a data lake or into just a bunch of, CSV files if you want. If I am paying for a system of record, I will demand that you let me print it out and take it out the door if I want, because that's my data. But of course, there are different integrations that can be made a little bit more difficult. So I'm wondering if in the age of AI, there's the binding between, even if Salesforce or Box doesn't let me with one click offboard and onboard into a different service, if I show up with my McKinsey or my Bain and Company, and I have a team of Accenture, but it's all AI, and I say, hey, I want you to pull these files out one by one. Take screenshots if you need to.
Yeah, one of my portfolio companies is building agents for enterprise migrations. That's huge comment.
So can you wrestle with that? How does that play into all this?
Look, I think it's a great point. And certainly even the last 5 years, more and more companies are putting trying to get all their data inside, cloud data warehouses, Snowflake or Databricks or whatever. Yep. And so I think that trend is continuing. But the question is for enterprises, where is that on the priority list?
Totally.
It's just not on the priority list. It's that's there and it works. And I now want to move forward. Yep. And I want to take advantage of the next set of opportunities. I want to implement, the AI for call centers, AI for coding, AI for, healthcare, RCM billing, whatever it is. And do I really want to go through, even though it might be possible today of taking all my data in Epic and trying to push it somewhere else, it's just low on the priority list. At this point, they've already suffered through the pain of the last 10 years of all these implementations. And so I think it's like a lot of things inside these enterprises, they're going to build on top rather than try and rip and replace.
Yeah. One of the things that stuck out to me from the Joe interview was where everyone in Silicon Valley is familiar with the concept like built to grow. Like you're in growth mode, go, go, go. Then there's obviously a lineage of companies that are built to last. And he brings up kind of a controversial one, which is some companies are built to die. And that they've kind of done all that they will do. They've built all the products that they will do, and they are machines to kind of maintain their customers for as long as they can. But that particular product will not exist, and the people that work there will migrate to other projects in the portfolio. And I'm wondering if you have a unique perspective from your background at Trilogy, and then also the overlap between BCV's in a unique position. I don't know how tight the firm is broadly, but like Brookside could take a company public. It's like the coolest thing possible. And then you also have the private equity like lineage there that could turn around a company or take it in a different direction. And I'm wondering if that brings you a different perspective when you're sitting on a board to have a real conversation with a founder that's not just, hey, swing for the fences, and then you just if it's not a home run, you're never going to hear from me, as opposed to, actually, I can still help you make good decisions in the era where you're going public or where you're going and working with private equity or where you're winding the company down. Like, do you feel like you have a differentiated perspective there from other venture capitalists?
Yeah, I mean, I think the reality is that there's so many different ways to create value. Yeah. And it's funny, kind of in this era where venture firms are kind of, there's a stampede towards becoming private equity firms, and so
like, I did that first.
Yeah.
nobody.
We sort of understand that desire in capital. And so there's just a lot of different ways to generate value, to create value. And one of the benefits of being at Bain Capital is you see all these different divisions in private equity and public equity and credit. And it's just incredibly smart people that are partnering with companies to create value. And these companies are different stages, different dynamics, different competitive situations. And, a lot of great companies end up getting bootstrapped to the point where then they might, sell a stake to private equity. That was the case when we invested in SurveyMonkey. It was a bootstrap company. And then, we got involved as part of that business. And so I think that is just the reality. A good friend of mine, founder we backed early, Nick at Gainsight, we were part of that journey. And, he decided that the growth profile of the business was still going to be very strong, but was not going to be the 60 to 100% growth that, folks like us, venture investors, wanted. And so he, orchestrated, incredible exit to Vista, where, he was able to transition all the venture investors to a different type of investor that was in many ways ideally suited for that more mature phase of Gainsight's growth, over the last, 4 or 5 years. So I think that's an important thing. There's different ways to, create lasting value. And I think founders oftentimes, in social media are looking for a pattern or one way. There's just not one way. It's there are a lot of options out there.
Yeah. On a similar note, I know I think it's rebranded Sanctity Advisors. The credit arm of Bain is now
Bain Capital Credit. It used to be Sanctity, now Bain Capital Credit.
Got it. Yeah. And I'm wondering if just having any interaction with those folks has given you a differentiated perspective on what's going on in the venture debt markets. We were reading the other day in the Journal that we're back to new highs. There was a drawdown. Volumes expanded, but the amount of deals has contracted.
But also the number of individual lenders has increased.
Yes.
So the market just basically fragmented post.
Yeah. So I'd love to know your thinking and what you're advising founders on. When is the right time? What is the shape of the business? Like, what is the current meta for getting the most out of a venture debt partnership from, years ago? It was very different. How are you thinking about it now?
Yeah. I mean, I think debt is very powerful, but it's also very dangerous. And the reality is that, for an early stage company that's pre-product market fit, I think the best case use of venture debt is some runway extension.
Yeah.
And not even really runway extension such that you can sort of draw your equity down to zero. And so it buys you a few months. But even when our companies have venture debt and they're pre-product market fit, we advise them not to actually tap into the debt. It's there, so they can sort of extend the runway a few months. I think that's one option for venture debt. I think the second is if it gives you a clear path to profitability. If you're a later stage company and the venture debt can avoid a dilutive equity round and you can get to profitability, then I think it's very effective. I think for businesses which are rare in our world, but that have capital, that are a little more capital intensive, certainly credit can be a source of financing. Working capital financing, is effective. But your business has to be very predictable, and generally credit is best used when you're break even or close to profitability. I mean, I remember, we had this great company, Reich, that was, a PLG company, kind of in the space of Asana and Monday and all those companies. Ultimately, I think exited for north of $2 billion. But I remember Vista was looking at the company and they just said, look, given this level of ARR, we can take that amount of ARR and put 2x that number of debt on the business, because the business is so profitable, because it's generating cash, and that can allow that money to come out, to shareholders. So there are a lot of interesting ways you can leverage debt. I just think you have to be very careful if you are not quite a predictable company that has a path to profitability. Then I think you've just got to be very selective.
Yeah, it feels like something where you can get in a lot of trouble if it's not a foregone conclusion that you can raise another equity round.
Exactly.
But if you're at the place where you could always do an equity round, there's always demand at some price.
Totally.
But if you're ever going to be in a situation where there might not be enough demand to clear your next 12 months, 18 months of burn at any price, you are in trouble potentially.
Exactly.
Give us
please. Oh, I was just going to say we had Pete from Astronomer on the show. Where does that rank in terms of like crazy wild cards in your career? I feel like it was it just gripped the whole tech community, and I'd love to know a little bit of the play-by-play of like how you experience that internally, because it feels like the most unexpected story to ever emerge out of a company that is managing Apache Airflow.
Well handled.
Extremely well handled. Yes, but we all know about Apache Airflow now.
No one had in their 2025 bingo card Coldplay or Apache Airflow.
Exactly.
So both are in Gwyneth Paltrow.
Yeah.
But I got a call from my partner Enrique, who's on the board, Thursday morning, and he told me what happened, and I hadn't been on.
Wait, wasn't media. Thursday? The concert was like Wednesday night, right?
Concert was Wednesday night. Yeah, exactly.
You get this call. Hey, how's it going?
So I get this call, and I'm like, oh my god, that's crazy. And so then I went on social media and watched the video, and then later that afternoon, I ran into my wife, and I was like, oh, this thing happened to our company, and I was explaining, and I assumed it was sort of this thing like in the
isolated,
this narrow tech world, that I live in, and she was like, "Oh my God, everyone's talking about that video. It's gone totally viral. My kids were pinging me." And the part of it going, viral in tech, that's happened, and good news, bad news at various of our companies over time. But the part where it became part of the cultural zeitgeist for the entire country for literally 3 days. Never experienced anything like that. I think the board and the management team, Pete obviously is a founder. They did a really good job of one being number one, we responsibility to the employees and our customers, and let's do what's right. Number two, this is obviously a cultural moment, but there are also real people involved and their families and things like that. So I think they handled in a way that I think reflected a bit of that balancing act. And so, I think you had Pete on the show. He was great. And And I think the company came out the other side with more visibility. Certainly, I think our customer base feels very good about the business. The business, was growing very rapidly, and has continued to do so. So, we feel really good about the business. We feel good about the investment, and thank God for Gwyneth. So
Yeah.
Yeah, as always.
Absolute masterclass. Give us an overview of how you're thinking about what some would call American dynamism, but just this industrial renaissance. How you're thinking about what's important, but maybe not investable, versus what's important and investable from a venture standpoint.
Totally. Well, we don't like to call it American dynamism, but we call it an industrial renaissance. But we think that it's a really important trend and opportunity, and certainly I think that there are enormous tailwinds that are heading in this direction. Certainly the advances in technology and computer vision and the sheer cost of robotics and automation has come down. The geopolitics, onshoring, tariffs, labor shortages, all of that I think is creating the tailwind. Certainly, you've got similar set of dynamics if you extend into the military and Department of Defense. Our strategy here, really starting with our investment in Kiva Systems way back when, I think has been to invest in companies where the core innovation is still software. And there are elements that involve hardware and robots and things in the physical world, but the core innovation is ultimately software. And I think Kiva is a good illustration of this. When Mick showed me the prototype way back when, 2004, he said, inside an Amazon warehouse, a worker is spending 90% of their time walking to the shelf and 10% picking. And so he said, having a robot pick one of a million SKUs that are different shapes and sizes and weights and colors and t-shirts versus like a broom, he's like, that's an impossible problem. It won't be solved for at least a decade. It's now been, now 20 years, it's still not a solved problem. But he said the problem of getting a robot to move a shelf from point A to point B, he said that's a trivial problem. And so his insight was, instead of having the worker go to the shelf, I'm going to have the shelf come to the worker. And that alone tripled productivity, built this great company, powering all of Amazon today. It's really core to their fabric of how they run their warehouses. And so we're looking for opportunities like that are fundamentally software at their heart. It's more of a systems approach, really thinking about a problem holistically. These companies tend to be more full stack as opposed to just selling a widget of some kind. I think that also prevents you from being commoditized by low cost, offshore manufacturers trying to come in. So those are some of our thoughts kind of in this industrial renaissance world.
So you've backed every humanoid robot company.
No, don't get me started.
Sounds like.
I mean, we were talking about this. You see the exquisite demo, and it must be a jump to try and understand. Okay, can this person, are they just a genius and they can build one, or are they building a system that delivers to the tune of 1 million? We were talking about this with SpaceX, obviously tons of rockets blowing up. I think they're on ship 36, but the goal is not just get one rocket to space. We did that. We went to the moon. The goal is get it really cheap and reliable so it's going every 30 minutes. Same thing with what we're seeing with Zipline. Those folks are just focused on scaling and manufacturing. The Starlink stuff's the same. It's a completely different dynamic and problem that you're actually solving. Jordy, where do you want to go next?
Good question.
I guess.
I think Aaron Slodov had a post yesterday having some. He has a manufacturing tech company, and this idea of
Atomic.
Basically, understanding specifically these industrial renaissance companies. I have to imagine you're oftentimes meeting entrepreneurs where you're like, this seems like a good business. It should exist. But what is your actual investment criteria for a company that wants to make things in America that's not a company that is a system for making things, but something where it's an actual physical product as the output?
Yeah, I think if you're actually a core manufacturer as opposed to a technology company that's automating manufacturers, I think the bar is very high to invest as from a venture standpoint, because I think there are a couple of things you got to believe. I think number one, you got to believe there's truly proprietary technology, and that's just a high bar in manufacturing. I mean, you've seen it, with you guys were referencing the Roomba earlier, and Shark Ninja. Like anytime, as every Dyson product, every product that's out there, they have some equivalent. And Shark Ninja is a great company. I'm not disparaging them at all, but you realize you're going to get competition very quickly as a manufacturer. And so the question is, what is that source of competitive differentiation? And oftentimes it's software, some kind of software or network effect or data, that allows this business to maintain proprietary margins and a huge competitive advantage over time. And so I think you need that, or you need just an extraordinary, entrepreneur, a founder, an Elon-esque, founder. I just think it takes a very special kind of founder to build a physical products company. You're just dealing with the physical world is far less forgiving on so many dimensions. One, just making money, but two, having it work.
On that note of software, is it always software that enables like the bootstrapping of a network? I'm thinking of like Apple gets power from software, but not just software. It's like iMessage integration, a network. NVIDIA gets power from software, but it's CUDA. What is CUDA? It's a network of talent and standards. It's not just you copy CUDA and you're good, or your feature parity. Tesla, they have self-driving. It's great as a single thing, but it really is like a scaled network that gets better the more people use it. Is there some sort of dynamic there that creates a flywheel effect?
Absolutely. Yeah, I think that flywheel is really important. We're investors in this logistics company called ShipBob.
Oh yeah.
And ShipBob is like it's a tech company up and down, but when you think about why is ShipBob so powerful, it is ultimately a network effect, because we have so much density, we have so many warehouses, we know, and we have so much data. We know that customer A in New York City is going to order this product from this vendor. So we're going to make sure that product is sitting in a warehouse on the East Coast. And by the way, we're not going to get that right 100% of the time. So the 30% we get it wrong, we're going to be able to fill up an entire truck of stuff from LA and get it to New York, so that we can inject that package, at the last mile and bring down the package, the delivery cost by $2 or $3. And so it's a classic network effect business that's underpinned by data and software, but certainly relies on, in that example, relies on physical warehouses. We have a certain number of physical we don't own those. Those are through partner sites, but those are physical assets that are out there that create the density. We're using physical trucks to move things from point A to point B, but ultimately our ability to do that is driven by data and software, at the ground level. And those founders made a really interesting decision, which was, we are going to partner with third-party warehouses, but they have to use our entire stack of software. We're not going to rely on their side. If they don't use our warehouse management, our pick and pack software, they don't adhere to all of that, we're not going to work with them, because we need to have that, pane of glass that sees every bit of information from soup to nuts. So I think your point, John's a good one, which is, these businesses that ultimately create some kind of network effect. Ultimately, you have that flywheel that keeps going and allows you. Even you mentioned DoorDash, I think, on a previous podcast a few days ago. These businesses that people think of as low margin, once you get that network effect and that flywheel, you can just compound forever.
Well, thank you so much for joining. There's a ShipBob fan in the chat spamming. ShipBob will be a $10 billion company.
Go ShipBob.
Let's hear it for ShipBob.
Good to see you guys.
Awesome.
Thanks.
Have a great rest of your day.
All right,
Have a good one.
Too.
See ya.
See you guys.
Let me tell you about public.com, investing for those that take it seriously. They got multi-asset investing, industry-leading yields, and they're trusted by millions. And our public.com update is that ByteDance just made more money than Meta for the first time in history. Yeah, I think this is a boo because we root for Zuck. We root for America.
We are Team Zuck, but you got to give it up.
But you got to give it up for big numbers. Congrats to the team over at ByteDance, putting up some heroic numbers. $48 billion in Q2 to Meta's 47.5. Just over 47 billion. Oh, it's got to be rough over there.
Well, up next, we have the founders of Framer.
Welcome to the stream. How you guys?
Gentlemen, what's going on?
Hey.
Good to be here.
Big day. Big day. You guys are up late.
Thanks for hopping on late. I'm so trained to when we have two people, they got to debate. I think we got to get these guys to debate. What are we debating?
We do that all day. So.
Yeah. That's the life of a founder.
Give us an intro, the update, and
I got the gong ready for you guys.
What is top of mind for you guys?
What do we do with the gong?
Just wait.
You'll find out.
All right.
Yeah.
All right, here we go.
All right. So the update is we're Framer. We're a web design platform for professional web design platform where companies can run their entire .com. And we raised Series D that we announced today.
Let's go.
That's what it's for.
That's what the gong's for.
We should get
100 on 2 billion.
Wow, that is a big
number.
Congratulations.
Big number.
Were you guys in sales? Is that what the gong?
We just celebrate. Gong, right? We just enjoy.
Just huge capitalism fans, honestly.
Yeah, it's really just a love for business and big numbers. But yeah, it's a staple, and it's our pleasure to hit it whenever we can. But give us first time on the show. Give us quick background on the company.
Yeah.
Where you guys want to start?
History.
Yeah, so I'll go pretty quick. Like we're both product designers, and we sold our first company to Facebook, where we were product designer for a couple of years. And after Facebook, we figured, hey, let's do another company before we get old. That's more than 10 years ago. And we always loved building creative tools. So we figured, okay, startups are pretty hard. Why don't we pick something that we really like working on? So let's build the next Adobe. And everybody around us said, don't do that. You'll probably raise some money, but not for design tools. Just don't tell any investor you'll be building that. But we did. And then 10 years later, and a big pivot, here we are.
Overnight success.
Overnight success. Basically what Framer's really good at, I can talk about the product market fit. What we're really good at is we allow folks to basically designers ship websites themselves for companies. So you have let's say your Figma, where you do your design and then you turn it into an application. Yep. You've got tools like Squarespace and Wix, where you make your personal sites. But a lot of company websites are still built with code. It's kind of slow. You need a developer team. Yeah. And over the last couple of years, we saw more and more companies just wanting to ship sites much faster and do that in a visual tool. So that's what we built.
What's your take on the vibe coding boom? What are the within? I mean, we're all familiar with the growth of vibe coding stuff. What are the overrated use cases? What are the underrated use cases within the vibe coding boom?
Yeah, I think we're about to find out. I think everybody's just really excited with where it's going to go. Mm-hmm. Because in the beginning of this year, I'm sure that if you type in, make me a nice front page for the company that you're at, then, you're not really going to use that result yet. But you can see it's going to get there, right? We're close enough for the LLMs to, it's not going to win any awards. You can't really use it for your site yet, maybe for your personal site. Mm-hmm. So I think over the next year or two, somebody's going to make that work for companies. Somebody's going to make that work on brand. Somebody's basically going to allow designers to sort of teach the LLMs how to generate, just like an engineer kind of handholds an LLM to write the code. Yeah. And I think we're kind of on the cusp of figuring that out, and that's obviously what we're spending a lot of time on.
Mm-hmm. How important is the kind of network around Framer? I know there's people that make businesses designing sites that can be adapted and things like that. Is that a core part of the business in the way that maybe sort of like the Shopify app ecosystem might be? Or is it more in the direction that the platform is heading? Is it more about allowing people to generate sites entirely based on their own brand assets and things like that?
100%. So we call it creators, and it's a whole economy by itself at this point. people building more than just sites for clients, which is typically what you would think of is, okay, you build a website for clients. Next to that, they build templates, they build plugins, they build all kinds of assets that can be sold on the Framer marketplace. And we're starting to see people make serious money off of that. The most impressive examples are folks that basically start with a new Twitter account with 0 followers and then set out a challenge to get to 10K in, let's say, 30 days just by making sites and selling assets on our marketplace.
Are they successful?
I think
or
we're actually.
It sounds like they've already done this. Is that what you're saying?
Yeah.
This is happening every day.
This is the whole thing now on Design Twitter, and I think there's a couple of outlier examples of people who are now doing like 300 or 400K a year just building businesses on Framer by selling these assets.
Yeah. Are there features or functionalities that you think you want to add based on the generative AI boom? I'm thinking like we've seen these like not just build a landing page for a business, but build a game or use 3JS or WebGL. And there's more tools that feel previously it was like, okay, that's if you're going to build a video game in the browser, like that's going to take you a long time. And now people are vibe coding them. Are there other features or web components that you want to like surface more easily to prosumers?
Yeah, if you have like a big web platform, you can go a few ways. Like one is obviously the marketing, sort of that what we're trying to figure out. Just help startups ship the most beautiful websites really quickly that go very fast. And then you can always go into e-commerce, but all I see is Shopify. I see a lot of people try, but all I see is Shopify. So you got to be pretty confident to go after that. And then the third thing is that there's something between an app and a site that people can't really make today, right? So there's websites, we're really good at marketing websites now, but there's obviously websites that do more, right? Like, so they're more like a database, a catalog, they could have a feed, they have login state. And that was always constrained by people that could express that logic. And for that, you had to code. And I think, like we're in an interesting time where the LLMs can maybe help with that. So it's definitely something that we're also going after.
Yeah, how it feels like your guys' strategy is the entire market for creative tools today is extremely loud, right? Every day there's new tools launching. You guys seem to be extremely focused still on this core value prop of helping people make beautiful, simple, professional sites. Is how much what do you how do you think, not to get too far out into the future, but how do you expect, do you think my view is that the .com is like a hyper durable asset that will continue to have a lot of value for the next decade, 2 decades, et cetera. And there was a time when people thought that URLs and everything would just become applications and things like that. And I don't think that's panned out. What's your guys' vision for basically the future of the website itself, right? At a time when, already we're seeing in different tools, different, consumer LLMs that will generate UI and scrape websites and things like that. What's your kind of, what does the website look like in 10 years?
Yeah, not like a chatbot. But you'd be surprised, we've been pitching obviously for this round, and you'd be surprised how many VCs think that might be the case.
Yeah.
But the web as a form to present your brand and build brand equity just isn't really going anywhere. Yeah. But one of the things that we really like, we're both product designers, so obviously we have business goals, but if you ask me why I get up in the morning, it's also to make the web cooler, and the browsers can do a lot of really cool stuff, right? The LLMs unlock people to build stuff for that. And the websites kind of look boring. Like they've only gotten to look more boring over the last 10 years. So I think tools like Framer can really help the designer sort of express more interesting websites. So I think that, with the advent of more people being able to execute on that, but as well as sort of like, showing more, like doing more cool stuff that the browser can do, like combining 3D and video on websites, making much richer, cooler experience. I think that's really where things are going. So I think the browser is still such an underrated sort of piece of technology in terms of how it's used for presentation. And if we give folks the tools to build like cooler output for that, then they will.
Yeah, I think it says a lot that every major AI company wants to have a browser themselves, or they want to buy Chrome, right? That to me says all you need to know, at least for now, around where the category is going.
And it's pretty interesting that all the AI brands are very heavy on their personality on the internet, right? So they all have pretty websites and beautiful brands, really nice .coms.
Yep, .coms forever. We're big .com enthusiasts here.
Huge enthusiasts. Thanks so much for hopping on, guys.
Yeah, congratulations you guys and the whole team.
Awesome. Thanks for having us.
Thanks so much.
Cheers.
All right.
Cheers.
Bye.
See you.
Up next, we have a great .com, super.com. But before I tell you about that .com, let me tell you about AdQuick.com, out-of-home advertising made easy and measurable. Say goodbye to the headaches of out-of-home advertising. Only AdQuick combines technology, out-of-home expertise, and data to enable efficient, seamless ad buying across the globe. And we will bring in super.com with some news.
One of the best .com.
How you doing? Good
What's happening?
What's the latest?
Good. Doing well. Thanks for having me.
Thanks for hopping on. Give us the news.
Well, first, I saw your comment. Thank you for the domain shout out.
Of course.
Yeah,
it's fantastic. Give us, before we dive into the news, how did you get, any crazy stories getting the domain?
Yeah, definitely crazy stories. So we had a different company name. We were called Snap Travel. We wanted to rebrand. We did this whole activity and this whole exercise. And we liked the name Super because it's how it made our customers feel. Like when they saved money, when they found a great deal, they felt super, and we loved it. But it was such a generic word. If you Google super, you're just like getting Super Mario Brothers, you're getting whatever you're getting. So we're like, okay, we got to go and get the .com. We reached out multiple times, didn't get any answers. I'm like, okay, forget this. Meta at one point launched some product called Super, and we're like, oh, they probably like are going to try and buy it. And it was just like, we're not getting this domain. And then we got a domain broker, and out of nowhere, they were like, okay, this person's like interested, but it was a pretty intense negotiation process. It was kind of in the single digit millions, and then it got to the board level. And it was split, and it was 50-50. Half the people were like, I don't think this is worth it. People don't really care about domains anymore. They just like search on Google.
So not true. It's so not true. Like people. I mean, domains are still, I think, wildly underpriced. Like .com specifically, and it's because people have just been so trained. If you've been on the internet for any amount of time, you know that when you are on the website of a big business, it's a short .com, and when you're on the site of a less legit, less established business, and consumers are really smart. They just pick up on these things, and it's interesting. So you guys, I imagine you guys have trademarked super.com because you can't trademark like super or who knows.
That's right. Yeah. That's right. So we trademarked super.com, and anyways, the story was it was 3-3 on the board, and ultimately as a CEO, I get to make the hard decision. So we're like, we're going to do this. So we bought the domain. And you're right. I think for consumers, it does matter, right? So
totally.
So the big news, we just wanted to introduce our incredible momentum. So we crossed over 200 million in annualized revenue.
Congratulations.
Crazy.
And if you think of the evolution, so we've been around for about 9 years now. We started the company, and it was just like travel, it was just travel hotel deals, right? So we were doing hotels for like 4 or 5 years, and then we like completely rebranded to super.com, expanded the product, introduced this membership program, and that's just allowed the business to completely take off. So we're now, hundreds of thousands of paying members as part of this membership club to like save more, earn more, build credit, and just experience more of what life has to offer. So it's how
is it trying to get coverage from the legacy media for just doing a lot of revenue? I feel like they still are like, I don't know if it's a story. Like, come back to us when you raise like $1 million. But you're like, ma'am or sir, we're doing hundreds of millions of revenue. I think this is more notable.
No, it's so interesting. The traditional media, they don't have the time to like think about that, and they're just like, if it's a fundraise, I'm interested. If it's not a fundraise, I'm not interested, right? So, but there's a lot of companies that are doing really well and driving a lot of revenue, and I'm happy you guys are talking to us.
Yeah, what are the other business models in the category that you deliberately avoided from, like lessons from like the previous cycle, previous strategies that maybe like might have product market fit loosely, but not real sustainable business models?
Yeah, that's a really good question. So let me take a little bit of a step back. Okay.
Please.
So the company super.com, we have a membership program called Super Plus. Super Plus is $15 a month. And the idea is when you're a Super Plus member, you just get 15 to 20 benefits. So you can save on hotels, you can save on gas, you can save insurance, you can save on pharma, you can earn money playing games, filling out surveys. We have a MasterCard that helps you build your credit score and earn 1% cash back. And some people come in and they use like one or two products. Some people use like 5 or 7 products. But ultimately it's like you think this is worth $15 a month, or you are getting more than $50 a month worth of value, right? And for some people, I just book hotels like once a month, and I'm saving thousands of dollars. For other people, it's I'm using the cash advance product, I'm earning money, I'm building my credit score. So everyone kind of uses the app somewhat differently, and we use AI to kind of customize the app. So you'll see what we think is most relevant to you that will give you the most value from your membership. Now, you asked a question, which is like, what hasn't worked out, right? So we are like, okay, what can we add to the membership? What can we try? We tried something about 2 years ago where we thought we could get into selling discounted, like physical goods, like actual products, right?
Yeah.
Sounds
what
tough.
we found and what we learned, yes, it's very, very tough. It's almost impossible to compete with Amazon.
Yep.
But the hardest part was that you can't consistently get a large supply of discounted physical products. It's either it's like it comes and it goes, and then it's like, oh, this is a hot item now, and then it's not, or it's like you get outdated stuff, and then it sits in a warehouse, and you couldn't keep that steady supply of discounted goods, and it became a very unreliable customer experience. So we actually acquired a company, tried to build up the goods business, had a physical warehouse in Miami, and then we ended up just shutting that whole division down and shutting down that warehouse. So not overnight success.
What's working on the customer acquisition side? Where are you guys, spending money on acquisition most aggressively? And then I have another kind of related question.
Sure. So each product has its own acquisition channels that work well, right? So we don't necessarily advertise the entire membership and say, hey, come join and get like 15 plus benefits. The way we acquire customers is we go for like one product, and then they come in and they're like, oh, I'm going to become a member because this product is so worth it. And then hopefully they stick around and do more things, right? So for hotels, it's a very high intent product. So what that means is it doesn't matter how much advertising you do on Instagram or Facebook, it doesn't really work, right? What works is when you're on like Google or Kayak or TripAdvisor and you're like typing in like best hotel deals in New York and you have that intent to purchase. So like on the travel side, it's a very high intent channels.
Yeah.
If you have something like make money playing games, that actually works really well on social because people are scrolling on TikTok.
What's the actual economic model for that? Because if anytime somebody says that if you tell John you can make money playing video games, I'm a little bit worried he's going to get on Super and have a little bit too much fun. He likes video games.
Yeah, so I'll tell you the model on that. And first of all, it's not just games, right? So I'll give you one that's really easy to understand. So if you come to super.com and you want to make some money and you go to earn, you may see something that says, if you've never taken an Uber before, download the app, take your first ride and get $20. Pretty obvious, pretty simple. So they'll go in, they'll download the app, they'll take their first ride, and we'll just deposit $20 into their wallet. And for Uber, that's obviously a user acquisition strategy. They believe that customer, and Uber's probably paying us $20, and we're just, or $30, and and we'll pass most of it back to the member. But for Uber, that's a user acquisition strategy. And if they can then get that customer to eventually take more rides, then that's worked out for them, and they were happy to pay that $20. For game developers, it's kind of the same thing. It's like, you get paid for like downloading the app and getting to a certain level. Now, if you get to that certain level, then potentially that game developer's generated some revenue from you because you've seen some ads, clicked on some ads, maybe you bought some gems, maybe you did something else. So it's just almost like an ad network play, where it's just another source of user acquisition for a lot of these companies.
Are you guys? Do you guys spend time like thinking about how you're showing up, how the different products are showing up in LLMs? Is that a meaningful acquisition channel for you guys yet?
It is. So it's something that we're looking at closely. You've probably seen there's a ton of AI companies that's working to help you optimize how you show up in LLM. So some of it is almost traditional SEO-ish, where you just kind of need to have that basic infrastructure and right folder structure and right information. But what we're seeing is that the LLMs are pulling from a lot of user-generated content as well. So things like Reddit and like TripAdvisor forums and, even YouTube for that matter, like wherever user generated content's happening, they're pulling from that as well. So some traditional SEO, and it's actually spending a lot more time and energy thinking about user generated content and how we can help, be part of and moderate some of those conversations.
Totally.
Great. Thank you so much for hopping on.
Congrats on the milestone.
Congrats on the milestone.
Massive.
Thank you.
Have a good
Appreciate
one. One more
it.
air horn.
Enjoy the rest of your day.
Cheers.
All right. Thank you, guys.
Congrats.
Let me tell you about Bezel. GetBezel.com. Your Bezel concierge is available now to source you any watch on the planet. Seriously, any watch. Go to GetBezel.com.
Legends.
And we have another great .com coming in to the studio. Keychain.com.
Boom.
Simplify your supply chain with AI-powered CPG. Good to meet you. How you doing?
Thank you.
Would you mind kicking us off with an introduction on yourself and the company and maybe some background and how you got into this particular business?
Sure. I'm Oisin Hanrahan, the co-founder and CEO of Keychain. I spent the last 15 years building online marketplaces. Mm-hmm. I built a company called Handy. Handy's like Uber for handyman and cleaners. Built it up to 9 figures of revenue, sold it to Angie's List.
Congrats.
Angie's is, that was a good outcome.
Yeah.
Angie's the largest home service company in the...
Hey, let's give it up for good outcomes.
Yeah. Congrats. That's awesome.
Sorry, continue.
What gets a ding and a bell? What are the rules?
You never know.
There are no
rules. It's whatever I feel like. But
Okay,
keep it rolling. We'll see. I can feel some more.
I feel some more stuff coming.
I took on running Angie, so I became the CEO of Angie, ran it as a public company.
Sorry. I just had to mess with you.
I mean, it is founder.
That's
Yeah.
It was
you
fitting.
put him in the founder seat. It's good.
Not enough founders do that. Is get acquired and then take on the top spot.
I don't know if I'd recommend it. It's a lot more work. I feel like when you sell the company, like there's this thing where you can just rest, invest.
Yeah.
And that's what my co-founder wanted to do. He was like, could we not do all the things? I don't know. We should do all the things.
You're like, get ready to be important at work, buddy.
Every day, not just some days. Yeah, every day.
That's wild. I advocate that for all my friends who get acquired. I say you should become the CEO of the acquiring company. That should be the goal. But yeah, anyway, you found your way elsewhere.
Yeah. So I was a CEO. My co-founder was chief revenue officer, and we ran it all the way to the end of 22. Mm-hmm. And then we both left, and we took a little break, and then started another company. Mm-hmm. And we, second-time founders tend to do this thing where they think they're going to start a studio company where it's going to have like 4 or 5 companies inside it, and they won't actually have to run many of them. We tried to do that very unsuccessfully for all of about a month and a half. Mm-hmm. And there was one idea inside there that just started to work really well. And we doubled down on it and really got behind it. And we've been running it for about a year and a half. And the idea is to build the platform that CPG runs on. So you guys know this, but most CPG companies don't run their own facilities. They have co-mans or co-producing facilities that run all of their production. And there's a whole industry of about $500 billion in the US of 20,000 companies that make, all the products that you eat, drink, brush your hair with. And we are building the ecosystem and platform for those companies to run on. So we're starting with search and discovery at Keychain, and we built the deepest database of how brands and retailers find manufacturers.
Mm-hmm. So I am like super intimately familiar with this space. I ran a consumer packaged goods company, and it was always a struggle finding supply chain partners. It was always some kind of like loose network of asking friends for favors and whatnot. The best in class database about a decade ago was just from a news website called BevNet. And they kind of aggregated up some manufacturers. I think they let people run ads, and it wasn't their primary business. They were mostly like a news and reporting organization, a trade publication. So it makes a ton of sense. I would love to use this product if I was building a CPG company today.
It's funny. The process. Somebody has an idea for a CPG brand, at least pre-Keychain, and it was like you just start asking your friends, random people.
Who knows?
Hey, how would you make ice cream? How would you make a
protein bar?
I met your co-founder Jordan during, I think probably back in 2020, because it was investing in random consumer brands. Super sharp kid at the time. Now clearly grown man.
Yeah.
But yeah, this process is still. I mean, the challenge is in how do you make sure that the incremental consumer products entrepreneur and I would say it's easier to go acquire the customers that are making a lot of net new products or have like a product release schedule. It's also how do you make the incremental CPG founder aware that Keychain exists so they don't go through the traditional process of just asking friends and asking around, how do I make this thing?
Yeah, I think you're right. And that's where we started. So we built the product for enterprise. So at Handy and Angie, some of our biggest partners were the Walmarts of the world and the Targets of the world and the Costcos of the world, where we did their home service. So we had those relationships, and they obviously make most of the private label product in the country comes out of the biggest retailers. So we actually built the product for large private label brand owners, the people who churn out product every single day.
Yeah.
And that's where we started. So today, 8 of the top 10 retailers in the country use Keychain. And the same is true, actually, of the large brands. So you think of the large strategic brands, some of them have invested in Keychain, like Hershey's and General Mills. They obviously have a lot of facility that they make some of their own product, but they also contract outsource a lot of it. So we built the product for them to be able to search for manufacturers. And it's funny. So because we built the product for enterprise, we almost got the startup for free. Like we got the fact that the startups are out there and they're constantly looking, it's harder for them. But because we built this data asset, and I heard you in your last segment talking about SEO and LLM optimization, we started with the data asset, which is the deepest asset anywhere in the world of US CPG manufacturing. We've invested millions of dollars into building it. And it frankly can tell you who can make what better than any broker, any trade show, any, phone a friend.
Yeah. Do you feel like is it trade shows that you're disrupting, right? I mean, if you wanted to make CPG products and you're Target or someone like that, you're going to a trade show and you're like, what can you make for me kind of thing? And this just seems a lot more efficient. I went to Expo West once and I almost overdosed on caffeine because it was like that year, every single product just had maxed out caffeine. It was protein bars with caffeine and all that stuff.
This is deeply bearish for Las Vegas. We need to get Taylor Swift to go to the Sphere immediately because there's going to be no more trade shows after this is done.
Well, if you had gone last year, I think you would have overdosed on psilocybin because everything seemed to have some form of like mushroom in it.
Yeah,
or you would have overdosed on protein.
There's always a trend. There's
protein psilocybin.
Oh my god!
Yeah, there you go. You got it. Yeah, you got it.
For when you want to build muscle while you hallucinate.
Which is first, but anyway. So we don't so much think about it as disrupting trade shows because we really do think there's a role for trade shows, and it's just not what we think. Trade shows are a truly awful way to do structured data discovery. And that's what some people do to trade shows. Like they walk around looking for a particular thing. Trade shows are a freaking amazing way to deepen a lot of relationships quickly.
Yeah.
So if you know who you're meeting and you've done the research in advance on Keychain and you've set up conversations, you can meet the right 15 manufacturers in 30-minute segments and have the best trip to Expo West ever. Or you can wander around getting absolutely loaded on caffeine because you're going from booth to booth to booth and have a pretty ridiculous time, and maybe you meet 2 of the right people. So it's like, how do you take structured data and figure out how to appropriately use the right tools so that you can have a great trade show experience? And that's effectively the first product the Keychain has launched. So that product today is in month 18, and it does about $1 billion worth of search volume per month.
Wow.
And we're in the process now of launching our second product, which is a bridge into the operating system for manufacturers.
Yeah. Last question. We got to let you get out of here, but we have one more sound effect. Do you have any fundraising news for us?
We do. Yeah. We raised a little bit of money.
How much did you raise?
We've raised in total, the last round was 30 million, so we've raised $68 million.
Oh, congratulations. There we go. So it's almost like you've done this before.
The ding and the bell thing.
That gong hit is authentic. That's
that one's
analog.
Real. That's a real.
We have a real gong.
Oh, that one's real.
That one's real. Yeah.
That wasn't a video of you doing that before.
No. We have a real gong.
Yeah.
Anyway, thank you so much for hopping on the show.
Awesome. Yeah, great to meet you. Congrats.
Thank you so much,
on
guys.
the
We'll talk to you soon.
Cheers.
Take care. Bye.
That was a very cool segment. I would have killed for that in 2012. Anyway, let me tell you about Wander. Find your happy place. Book a Wander with inspiring views, hotel-grade amenities, dreamy beds, top-tier cleaning, and 24/7 concierge service. It's a vacation home, but better. And up next, we have a guest in the Restream waiting room. Let's bring him into the TBPN Ultra Dome.
John, welcome to the show.
What's happening, guys? How are you?
How are you?
Good to see you. Good. I'm just looking. This is what the fortress looks like, man.
Welcome to the fortress.
Fortress of Finance.
Welcome to the capital.
Awesome. Thank you for having me. We love you guys.
We love you too.
For hopping on.
It's phenomenal. So,
kick us off with just a brief introduction on yourself, a little bit about your career, and then I want to go into the hope for common stock, the bull case for startup common stock.
Yeah, for sure. So I'm Jon Callaghan. I've been an entrepreneur and venture capitalist for a long time. We started True in 2005. We're an early stage fund.
There's also sound effects.
20-year overnight success.
Yes.
Yeah, exactly. That's the way it all is here in the Valley. So, we started the firm with a vision of, frankly, our tagline was more venture, less capital. We thought the world needed venture capitalists who were going to, take big risks, and entrepreneurs, were coming out at that point, by the way, post sort of bubble crash, post 1.0 crash. There were a lot of new technology changes, DHTML, open APIs. So all of a sudden, all these really creative founders were coming up with really cool ideas. You guys remember mashups, and it was you could do a lot of things with all of this infrastructure that had been built in the 1.0, and you could build a lot of application layer value. So that is a pattern I will talk to you about here about what we're seeing today. So that worked out really well for us. True's been extremely lucky. We've been investors in category-defining companies like Fitbit, Peloton, Ring down in LA. Jamie Siminoff is awesome. Also in LA, Sweetgreen with John Neiman, Blue Bottle Coffee.
Ring, which Ring? Isn't Ring the security
company? I could
company?
make a joke that say there is only one.
There's only one.
Security
There's
company.
only one.
Security.
Okay.
The one that protects you and your family and your neighborhood. Ring.
Yes, of course.
Yeah. The company's acquired by Amazon.
That's right.
And Jamie's up there.
I had a funny Ring story. Someone on our team was dropping something at my house the other night. And I see somebody with a hat on and a backpack on outside walking around my car. I was already in about to go to sleep or whatever, and I fully thought Dylan on our team was somebody doing a break-in. So
in the early years of that, in terms of what Jamie, I think at one point they caught a criminal a day. They did a big thing with the LAP. It was just awesome, but also like the wild animals and all the anyway. Ring was great. We're also big in enterprise. We do a security, HashiCorp, all sorts of other things. We've had 7 IPOs, 60 M&A. So we've been doing this a long time. And we're the biggest in our category of pure seed, $4 billion in capital, 16 partners. Wow. It's all we do. It's all we do.
That's amazing. So take me through the last few cycles from your perspective, what's changing around where the founder sits in value accrual, common stock, how you process ZERP and the last bubble and the crash and all of that.
Yeah, for sure. So that's kind of what caused me to write this piece. And it's like all things I've been, the good ones always take like an hour to write, kind of thing. And the other things that you kind of gnash around. So been doing this a long time and have seen a lot of waves, and we've been a part of a lot of waves. And the things that we are experiencing now, and I can talk through them around AI, but it's really capital efficiency, which we'll talk a lot about. That drives a lot of the sort of solution to the tragedy or the fixing of the tragedy for common. But capital efficiency, the size of the TAMs, the founder ethos today, your question right now, John, like what's happening with founders? It's all leaning much more towards this do more with less. The conversation now at Great White in LA or at Coupa in Palo Alto or is or Blue Bottle at South Park. It's all about like how much I can build with how few either employees or capital.
Sure.
And that's a good thing. You guys talked about the earnings release yesterday of NVIDIA, but Jensen said yesterday there's 2 to 3 trillion. No, I think he said 3 to 4 trillion of CapEx. Yeah. Our numbers internally are sort of 2 to 4 trillion of CapEx going in to the AI wave over the next 5 years.
Yeah.
So any other wave, Web 2, mobile, cloud, that we've been a part of, the value that is created at the application layer on top of that CapEx is on the order of 5 to 10x. So we're talking about new TAMs, like markets that haven't been invented yet, that we don't know about yet, net new consumer behaviors, net new enterprise behaviors at a level that is, I don't want to say that like unprecedented, but like it's just really big. And as you guys have noted a lot on the show, the wave's happening really fast, quite a bit fast. The waves kind of keep coming in faster increments. And we're just seeing that combination come together and create what I think is the vintage of a lifetime as a venture capitalist or as a founder. We've got the most powerful tools we've ever seen. Mm-hmm. On the TAMs, like we talk a lot about software. It's $1 or $2 trillion globally. I think it's like 1.2 doubling in 5 years as a market. It's super big. Yeah. Services are 17 trillion today.
Yeah.
Doubling to 30. So like you have these.
I want to push on that common point because I feel like you're correct that revenue per employee has never been higher, but I feel like with maybe Midjourney is the exception that proves the rule, but founders have not turned a cold shoulder to preferred equity in this cycle. Like there are plenty of founders who are saying, yeah, I'm fine selling 10% of this company every 6 months. And they've done very well. And
15% every 3 months.
And each deal has been accretive to the share price potentially, but they are getting diluted. And I'm wondering if there's more nuance to that.
Yeah, I mean, the
structure.
More opportunity than ever to do more with less. Right?
Yes.
But at the same time,
more opportunity to do more with more.
The opportunity is so large. There's a lot of reasons.
If I could do more with less, imagine how much I can do with more.
You can do with way more.
I can do with.
I think it's a matter of magnitude here and context. And you mentioned ZIRP, so we have to kind of talk about ZIRP. It's been super well covered, but like that distortion is at a level. Remember, it was like a decacorn a day was being crowned. There's $3 trillion of limited partner capital locked up in zombie unicorns, according to Bill Gurley's estimate, which I referenced in the piece and others.
But are we not? Do you think this time is? Do you think this time is different?
I think that time was different. So the answer is no. I'm not. I'm counting on this time being a time that is like other waves. The reason the distortion, by the way, like we should talk about it for a second. So, here's why I think this time won't be ZIRP.
Yeah.
I mean, how's that for nuanced, right?
There you go.
It's the same people. Like the founders, if you look at the senior leadership at startups and companies, they were the ones who, were at different levels through ZIRP. They've been stuck under the stack. Yep. I'm not saying zero equity. And in fact, if you look at the last couple of, maybe 4 quarters, there's probably been 20 mega seed rounds, the $350 million seed round or whatever, 20. There have been 2,500 seed deals done first half this year. And it's power loss. You're going to have lots of failures and stuff. But just when you look at ZIRP on a magnitude basis, so much distortion happened. And I'm not saying there's not going to be those companies, to your point, that just keep raising and raising. But I think founders are going to be a lot smarter about post-money valuation because most of, as you guys probably know, that the 14
there's a company that I won't name that is a perfect example of this. They've raised under $1 million, so hundreds of thousands of dollars. They're doing millions of dollars in revenue. They have logos from every single top AI company, and they're just growing like a weed. Like it's just clearly they're onto something and the founder has no real interest in raising, he could he feels like he can take it as far as it can go just off of just raw customer demand.
You guys had Wade on, I think, last week, right? Yeah. The great example of a company that, raised a little, but kept making the choice. I think that term you guys talked about was super cool. Seed scaling. I hadn't heard that, but it's what we're seeing. So I guess, John, the answer is I'm not saying no venture capital. I'm just saying, that would be bad for me. But I'm saying
and Zapier's funny because the category that they're in, which is like agentic workflows, is like they're, dominating, having been building this business for such a long time. And yet I can think of 100 companies that have raised on the same kind of core idea of what they're doing. So that category is turning into a crazy capital war, but hopefully Zapier is in a point right now, given that they've been at it for so long, that they can just keep playing their own game.
And in a world in which, if it's true that on top of all this CapEx, all these net new companies and behaviors will be created, I just think there's a lot of room. We have one thing we've done as technologists, all of us, is we have always underestimated the potential, and we've underestimated the tail, both the curve and the tail of everything. Web 2 is still booming along. Mobile is still booming along at massive numbers. And so
look at Oracle's stock price. Oracle is still crushing.
About to be the Mag 8.
It is.
Yeah. So I think there's a lot there. And then the last point on the comment is just that that has fueled Silicon Valley, right? It has fueled Silicon Valley for all sorts of different outcomes to, sprinkle wealth or gains down throughout a company's stack. And then literally I said in the past, this happened thousands of times in my career where that engineer or, VP or director then takes more risk. And that's what we need. And that has fueled the Valley. And so my thinking is that it's that the ZERP distortion is what was different, but that Silicon Valley is it would never bet against the Valley. It would never bet against the creative destruction.
When companies, as an investor, when I was looking at trying to figure out the why now, investing in 2021 and 2022, and in fintech, it was like, okay, Stripe exists, Plaid exists. You have these new kind of infrastructure players that allow you, there's better banking as a service platforms. But the why now was it wasn't necessarily, it didn't feel fully like a why now. And then you'd end up paying 100 times revenue for basically a lending company that yes, they benefited from Plaid being, what it was at that time. In terms of market penetration, but it wasn't in the end a lot of those businesses didn't end up really going anywhere. Whereas I think having a real why now today, it's not, founders very easily talk and investors will talk themselves into being okay, they'll talk themselves into feeling like there's a why now, even if they're just kind of fabricating it. So.
The why now, you've talked a lot about it in the enterprise, but the why now in the enterprise has caused, a lot of new entrants to have great success against incumbents, right? That's super interesting. Mm-hmm. There are all sorts of new, again, this whole if you were talking about enterprise software a few years ago, kind of pre-AI, you'd look for these tiny little verticals where you could have an advantage. And now the whole playing field is open to startup founders, and they're having incredible success either in, but you've had a bunch of them on your show. And I think that's also really interesting, not without it. So it's coming from the customers, right? It's coming from the buyers of technology, want this new thing. Incumbents have a hard time delivering that new thing. Not going to be smooth. I like how you're talking about where you're on the hype cycle. It's going to be bumpy throughout the curve, but it's just a remarkable time in all of these markets, and I think that's spectacular. I mean, again, I think it's the chance of a lifetime for a builder to start something now with these dynamics.
I remember I graduated college in 2018 and feeling like I had missing mobile, right? Not being an adult for a massive tech trend that felt, I read the TechCrunch headlines for years of all those companies, but not having been actually in the trenches, feeling like praying for another bubble.
Yeah,
certainly got one with real potential that we're already seeing. So,
well, thank you so much for hopping.
Great having you on, John.
Awesome to see you. Hey guys, we invited you to our thing in San Francisco, the Connected Stack. We'd love to have you.
It's, fantastic!
Huge enterprise AI thing.
Can't wait.
Do the show from the floor, whatever.
Amazing.
20 VPs, a lot of founders, whatever. Thank you for having me. It's awesome. We really appreciate what you guys are doing.
Come back on again soon.
Yeah, we'll talk to you soon
about that.
Have a good one.
See ya.
Bye. Up next, we're going over to Air.Inc. Have you used this product before? I used this and was obsessed. It's like, I don't know. I'll let him describe it.
Should we be using it?
Let's bring him in. We absolutely should, and that's why I was so excited to talk to him, because it was like, you can pitch us directly on the show.
Yeah.
Use this product.
Sales call.
Hopefully, we didn't start waiting too long. How you doing?
What's happening? Sorry, we're running behind. Great to meet you, Shane.
Nice to meet you guys. Thanks so much for having me.
Yeah, thanks for hopping on. Can you just introduce yourself, the company, a little bit of the backstory quickly?
Of course. It's great to meet you both. Shane Hegde, my co-founder Tyler and I started a business called Air. It's an enterprise software company. We help creative teams manage all their media assets. So we help them store and organize all their content and then execute on the day-to-day workflows of making quality images and videos, putting them out in the world.
Yeah. I was
the anti-slop company.
Yeah, I mean, like
the attempt.
There is some. Like, I feel like there's some crazy link between like your clients or your company, your customers, and like the brand. Like the culture at your company feels like particularly design forward. Like I'm looking at your landing page and it's incredible. I don't know like where. They're
talking the talk and they're walking the walk.
Yeah, exactly. Like were you guys designers beforehand? Yeah. Like was this something that like came from a particular person inside the organization? Is it just like everyone in the company is so focused on design?
I think look, if you're going to sell a product to creatives specifically, that's going to be your ICP. You really have to live and breathe the market. You have to put out great content on an ongoing basis to talk about the narrative of what you're doing. And you have to meet those expectations with how you deliver the product. The marketing site is just an extension of the product. Totally. So I think in many ways, it's come from an obsession about who our customer is and how we meet them where they are with what they care about.
Yeah, talk about the marketing. I've seen a few of the stunts that you guys have done. The latest one with the Rizzler. Like what? This is
when did you know you wanted to work with the Rizzler?
When did you know that you wanted to be the first enterprise software company to probably partner with him? It's just a wild choice.
Look, I think if you look at great generational enterprise software businesses, they all have a singular go-to-market motion that contributes to 50 to 60% of growth. Mm-hmm. And every enterprise software business chooses a different channel to really focus on, depending on who their customer is, what they're good at, and where there's arbitrage in the market. For us, it's content marketing. And there's a nuance in how we approach content marketing that we call culture-led growth, which is all fancy words to describe the format of content marketing that we do. It's not HubSpot SEO or Gong social all the time. For us, it's great, seminal campaigns that we put out in the world that espouse, the narrative of what we do, whether it's product marketing or just a viral campaign with a 14-year-old. It doesn't matter. You're pushing a story out to the market and getting a group of folks who care about that to resonate with it. And begin a conversation with you. So that's how it took years to get here to a point where we knew working with the Rizzler or Kareem or Taylor Lorenz or any of the other influencers we work with were the right ones. But it's been a fantastic motion and wildly efficient for us.
How much have you, I appreciate, I remember when Air launched and I remember thinking, I worked with a ton of different companies on, marketing campaigns and stuff like that over the years. So I understood the value prop, even though I felt like it was almost it was a contrarian move to launch the original product, like helped you just store assets. And a lot of people, I'm sure even VCs back then would have said, well, like people get
in a folder.
They get Google Drive off
Stuff it in a folder.
They're getting Google Drive for free. It's going to be tough to compete. But clearly there was demand for this. Now, how are you guys thinking about, not to ask like a very VC coded question, but I'm genuinely interested. How are you guys thinking about leveraging generative AI if you house all the brand assets for a business and you can understand kind of like the aesthetics of a brand? It puts you in a good position to not just store assets, but help people generate new ideas.
Even just like automatically matching assets to tags and like creating like an ontology on top of the data.
Totally. I think, in this moment in time, there is a rush to value. Every enterprise out there is trying to immediately get to the thing that's going to compound their business on an accelerated basis. The last conversation you guys were in, I love that tail end of that conversation around there's never been a more open environment in the enterprise for new entrants like us to come in and rebuild the entire stack of how a company operates. But when you look at different areas of the enterprise, in order to scale, you have to have, or automate, to your question around AI, you have to have a place to automate from. Said another way, slop in is slop out, and the richness of your solution is going to depend on the richness of the data that you build on top of. In every area of the enterprise, there has been a system of record that has structured and organized the data so that you can automate and centralize. This has been playing out for 25 years. It started with Salesforce building out what we now see as a CRM as a must-have inside of a business if it's trying to scale sales. Same thing with development cycles with GitHub, or marketing work with HubSpot for multi-touch attribution. There's never been a system of record built for creative work, for images, videos, PDFs, visual forms of data. At the highest level, if you asked a CMO or a creative director, how are your assets performing? What's performing best? Where are you going to invest in next? That's like a 6-month job for an analyst. And at the lowest level, if you're trying to talk to a designer about what they do every day, they spend 75% of their time collecting content, approving content, sharing content, and doing all of that all over again. And so our ambition at Air is to build a system of record for creative work. It's one product. We're never going to build a second product at Air. We're just going to go deeper and wider in what we do. And yes, you got to start with storage. That's the hard problem to start with. You have to sync and organize millions. Today, we're up to about 150 million assets that are being managed in our product. But the magic is on what you can do on top of that. The workflows that you can automate, whether that's rights management or whether that's like generating variants of something that you could plug into different ad units. It shouldn't matter. It can all sit on top of the baseline architecture.
You should create a workflow to help legacy brands not get canceled by Zoomers. So it's like it'll pop up an alert. Hey, Boomer, if you put this on social media, you're gonna get canceled by the Zoomers. And I think that could save billions of dollars of lost market cap.
I hope that it's funny. We had a hackathon that finished this morning. And one of the things that came out of it was a newsletter that goes out on an automated basis to admins inside of a workspace. And because if you're thinking about our product, about 15% of our customers have more users on Air than they have full-time employees. Starts with your creative team, expands to marketing, sales, product, partnerships, your agencies, your influencers that you work with. And then the other dynamic is that, about 11% of our customers spend more than 25 hours a week inside of our product. And so this newsletter aggregates what all everybody did and spits out a summary of that with all of the work to the admins in the workspace. And so visibility, I think, to go to your point around boomers and Zoomers and not getting canceled, visibility, I think, is really important. And our opportunity to do that in a system of record is no different than Salesforce providing a dashboard to your CRO to understand like which reps are performing the best, or where to lean in segment wise, or why win rates have improved.
Yeah, that makes a ton of sense. Amazing. Anything else?
No, this was great. Come back on anytime. You're the only person in the world so far that has made just storage interesting on the show. So
anyway. Thanks so much for hopping on.
We're gonna actually sign up for this because we were very much at
can we put you guys in the game here? Come on, you guys are the sort of beacon.
Well, we were iMessage scale where like our version of Air right now is just the group chat.
Yeah, it's literally all iMessage. It's a mess.
Come on, man. John can make the intro to Soylent. We're in the mix here. Put us in the game.
Yeah,
let's do it.
Awesome. Thanks, man.
Right. Great to meet you, Shane.
I'll talk to you later.
Cheers.
Bye.
All right, we're going to cap this off by just pulling up this post of what the Garmin horse tracker actually looks like.
Okay.
Because
you want to end with the Garmin horse tracker?
This is the most important story of the day.
Important story of the day for sure.
The Garmin it's
I see it wraps around the horse's tail. How else do you think you were tracking the horse's health, Jordy? Garmin is now selling a wearable you put on your horse. It goes on the tail, obviously.
No. Awesome. It's further down in the stack.
Further down. So that's what it looks like when it's not on the horse, but when you apply it to the horse while you're wearing your Garmin watch. So you can be riding your horse, check your horse's vitals from your Garmin watch. That's the future I want to live in. That's horsepower, baby.
This is important. Horsepower. I mean, this is $1 trillion company to me. They're sitting in...
Look
at this thing.
Yeah, look. Zoom in on that horsetail tracker. What is it actually tracking here? Midnight, outdoor training sessions, indoor training sessions, recovery, transport, max activity heart rate. It calculates the heart rate, how many strides. You can view the data live, and then Sugar's got a bunch of strides. That's hilarious. No, this seems
absolutely
amazing.
Beautiful stuff. This is why we love technology.
As much of a breakthrough as Waymo. It's already
really arguably more important.
More important
for some.
Horses are already self-driving.
Thank you for tuning in today, Max Conrad from the Substack chat. We needed this time is different sound effect. I agree.
Yes.
This time is different. This time is different.
Yeah, there must be some clip from like a movie where someone said that or something. Where does that "this time is different" actually come from? Maybe we can get Warren Buffett saying it or something. I'm sure he said it at one of his meetings or something.
Yeah. Anyways, folks,
thank you.
Thanks for hanging with us today. We love
see you tomorrow.